Hello folks, good morning. I hope you guys are doing great. So I will start our first day lecture about Breaker very soon at 10:50. So before that, please let me know if you guys can hear me loud and clear. Thank you folks, thank you for letting me know. The microphone is very close to my mouth, so sometime you guys will hear like the voice won't be very clean, it will be distorted, so I can't do anything about it. I'm putting it as much away from me as possible, but hope it will be good. So our 3-day boot camp, we are starting our first day of our 3-day boot camp, and this will be completely based on Breaker. Everything that I do with Breaker. Okay, there are a couple of stuff that I'll do that I put it away for another session. I will do another session with Breaker with you all, because one day what I thought is not enough for all the knowledge that I'll be sharing. You guys will require a little bit more examples from my part to understand each concept clearly. I included examples in our today's lecture, but these are not enough from what I think. So I'll do another session with you all about Breaker, and there today I'll cover like most of the topic, like 90% of the topic. Rest of the 10% I'll put it away for another session that I believe is very important for you all to understand. Okay, so I'll give like extra time for that, another session, another day. So the date is yet to be decided. I'll let you guys know as soon as possible once I'm done creating all the content for our later lectures. Okay, our next lecture that was supposed to be on 24th October about inversion, it may get delayed because, as I told you guys, I'm not satisfied with the examples that I made. I want to present more with you all, but if you guys agree, we can do like one session on 24th on inversion, and then another session on inversion at another day. Okay, so we'll start very soon our 3-day boot camp. I'll be waiting 1 or 2 minutes more for everyone else to join, and we'll start exactly at 10:52. So you guys can ask me question, any type of question. It doesn't matter if it's a beginning question or if it's a like an advanced level of question. It will be answered. I got nothing to hide, so I encourage you to ask me the question, but your question will be answered once I'm done explaining one slide or one topic. Okay, so don't be like you have to ask the question right now. I'll ask it, but it will take some time. Once I'm done explaining from my side each slides, I'll try to answer each and every question. I'll go through each and every question that you guys will be asking me here. So I chose YouTube to do the live stream, as on Zoom the quality is a bit reduced on Zoom. I tried to do the stream from the Zoom first, but the quality is stick with 720 pixel. So to me quality matters, so that's the reason I'm doing the stream on YouTube. You guys can watch this stream and it will be recorded. Okay, so you guys can watch it with higher quality later in future. It will be available for for the lifetime. So if you don't lose the link, or if you download it, save it for the later, that will be good. A lot of you are asking me about the PDFs, the slides. So every slide that you will see is done by me, and everything is handmade. Okay, so these slides won't be available with the workshop that you purchased, but it will be available for purchase later after I finish the stream. I'll let you guys know more about the details of how to purchase the slides, which will be with high quality, and you guys can use it for studies or print it out. But you guys can also take screenshot. I believe the stream is running on 4K, so you guys can take the screenshot, which will also be very high quality, and then later you can print it out. There's no difference between this stream and the PDF, literally nothing. The PDFs are like you are getting the actual quality, but from the stream, whatever quality we'll get from screenshot, that's it. Other than that, there's no difference between the PDF and the actual slides that I'll be sharing here. So we will be starting now. Okay, folks, so our first day is about the breaker. I'll share the complete model with you all here. So we'll go through a lot of topics. So our first topic that I'll go through is here about the macros that I use on stock, US 30, US 500, US 100. I also shared macros on Forex and crypto. These macros will have a separate lecture with separate models, okay? For today, I'll only be talking about the stocks, not Forex or crypto. These lectures will be solely on stocks. US 30, US 500, US 100. A lot of you mentioned it as Dow, ES, and NASDAQ. Our next topic will be how a breaker forms. Okay, there are a couple of rules that you will have to follow to identify a correct breaker. There are 5 rules that I'll be talking about with very deep explanation in our second slide. In our third slide, we'll be talking about all types of high probability breaker. There are 7 or 8 types of breaker. Okay, so I'll be sharing with you like how that breaker will be forming, what we'll be looking at, everything, and all of these models will be high probability. I won't be sharing the low probability models in this lecture. I'll be sharing the low probability models in a separate day. As I mentioned, we will have another session on breaker later this month. So that time I'll be sharing like what breakers you'll be avoiding, how to avoid a breaker that will fail. It will not be included with this lecture. Rather, these lectures will be very important to understand because nothing is guaranteed for 100%. Even your A+ setup will lose. So you will have to understand when it will lose. And that's the reason I put it separately, and the lecture will be given this month, and I'll let you guys know about the date. The fourth topic will be about the time distortion with breaker. Like it's more like when price does manipulation, high resistance liquidity run, and the lecture will be based on that. The fifth lecture will be AMD cycle plus liquidity with breaker. This lecture as well, this topic as well will be separated from this lecture for our later lecture, which I'll be doing later this month. Our sixth topic will be entries with Reaper breaker, how to take early entries with breaker before price activates a breaker. Okay, so on the third lecture, I'll be talking about like how price activates a breaker, how to take safe entries with breaker. On sixth topic, entries with Reaper breaker, I'll teach you guys how to take entries early before price activates a breaker, before like after we do turtle soup. So the turtle soup entries will be included in the third day of our lecture. That will be separately based on turtle soup, but today it will be on breaker. So I'll teach you guys after we take a turtle soup entry, how can we do early entries with breaker. There are a couple of entries that you guys don't know about that you can take with breaker, and you will know it in the sixth topic, entry with Reaper breaker. And trust me, no one other than me, I believe, knows about this Reaper breaker concept. The second topic will be reclaimed breaker. This alone will give you a lot of narrative, okay, a lot of logic behind what price does at certain times and why it does it. The seventh topic will be based on that. The eighth topic will be breaker in a trend. So sometimes you will see like price is trending, a lot of down close candles in a row, like 5 or 6 candles in a row. So how we will trade that? We will also be looking for a breaker forming in a trend. There's a logic, and the logic will be shared in the eighth topic. The ninth topic, which will be after the macro. Okay, I mistakenly put it here on 9th. This topic will be discussed second, after I talk about share the macros, breaker plus silver bullet. There are a couple of macros that I use other than the actual silver bullet timing that our mentor shared, 10 to 11. There are 2 macros that forms inside this time period. There are 2 other silver bullet time zones. I will also share about that in the 9th topic. The 10th topic will be about new week opening gap and the new day opening gap with breaker. How can you trade using new week opening gap and new day opening gap? Okay, so this topic will be also separated from our today's lecture. I'll put it away for another day, because these are the topics, the AMD cycle that I showed you guys, AMD cycle plus liquidity with breaker. Then this topic, new week opening gap plus new day opening gap with breaker, these will be separated from today's lecture, because these are very important lecture that requires a lot more time to understand. Okay, that's the reason I will give you guys more time. So the 3-day bootcamp will be more like 5 days, 4 to 5 days. I hope you guys don't mind getting more knowledge, right? So the 11th topic will be implementing standard deviation to project target. How can we measure a price lag from the breaker and project it in future to get specific targets? I'll talk about that in our 11th topic. The 12th topic will be when to avoid breaker. This topic is also separated from our today's lecture. 13, SMT and mitigation block with breaker. And 14th, a complete market maker sell model with breaker. So when I'm talking about reclaimed breaker, reaper breaker, I'll also talk about market maker buy and sell model with breaker. It's very easy to understand. I know you guys watched a lot of videos before from other Twitter traders about market maker XM, but what I'll be sharing with you all is very simple, the way I look at the chart using market maker buy and sell model. So I hope every topic is clear here and everyone understood. I'll be moving towards our next slide, where I'll share my macros. Okay, the macros that are available from the ICT himself and the macros that I use personally. So let's go. So the macros, I categorize these macros in 2 types. Okay, the first macro is manipulation macro. In these macros, you will expect to see price changing the trend. Okay, so suppose price is in a trend in a buy model. At these specific time periods, you will expect to see price having a market structure shift. Okay, so what are these macros? The first one is 8:20 to 8:40 a.m. EST. Don't worry, I'll be sharing the models that you will look inside this time period. Just for now, like remember, focus on the time periods that I'll be sharing here. 8:20 to 8:40 a.m. Eastern Standard Time. Why this time period is so important is the start of our New York zone. Okay, 8:20 to 8:40. That's the time period when you will see liquidity coming into market. Before that, price will be very slow with low volatility, low liquidity. But as soon as price gets inside 8:20 to 8:30, it will have liquidity, and that liquidity will provide us 3 types of setup. Okay, the first type of setup will be with breaker, second inversion, third will be on turtle soup. So I'll be talking about breaker today. Our second macro will be 9:20 to 9:40 a.m. EST. That's the macro that I personally use. Like there are days when I'm only executing inside 9:20 to 9:40. Other macros I'm basically not using. So this macro is very important. This macros lecture will be also added in a separate lecture, okay, like what to expect before this before this time comes in, or what to expect when price is trading inside 920 to 940 period. 930 is our New York Stock Exchange opening, so we see like a lot of volatility. What I'll teach you guys, like how to predict the Judas or the 930 delivery before price actually delivers it. We will have some confirmation from chart from price that will confirm that we can take or we can predict a move before it actually happens using this time period 920 to 940. We'll have a separate lecture about this macro specifically. It's very important. It's a very high probability macro. Among every macro that I'll share, this is the highest probability. Then we have 10:20 to 10:40 a.m. EST, which will be included inside the silver bullet macro. 11:20 to 11:40 a.m. Eastern Standard Time. Each of these macros here, folks, remember we are looking for market structure shift. We have other macros where price will continue a trend. Suppose price is already in a trend in a buy model. At those time, you will expect to see price continuing the trend. If price don't continues the trend at those time, then you'll be looking for different things. What I'll talk later. So we have our next macro, which is at 1:20 to 1:40 a.m. EST. It's our launch macro, which is very high probability. You guys usually like 60 to 70% of the time you will see price changing its trend inside this time. So what ICT uses is 1:20 to 1:40 macro. What I use is 1:10 to 1:40 macro. That's the macro from ICT. What I found is that our breaker setup forms after 10 minutes of the macro that ICT shared, okay? 1:10 to 1:40, this macro will be included with turtle soup. That's when in between the 10 minute, okay, the first 10 minute of 1 p.m. Eastern Standard Time, we usually have a turtle soup setup, so that macro will be included inside our turtle soup lecture. But today 1:20 to 1:40 macro will be for the breaker. Then we have 2:20 to 2:40. Every hour we have two macros, folks. 20 to 40, then 50 to 10. Always remember that. That's it, okay? You can use the same macros on Forex, okay? You can do the test. I didn't. I only tested macros on Asian session, and I found Asian session high probability than New York session. Price runs very clean inside Asian session on Forex. So when I'll be talking about Forex, I'll share those macros as well with a deep lecture. Our third macro is coming at PM 3:20 to 3:40. Now we will see like where price will continue a trend, okay? We are expecting to see price having a market structure shift at 8:20 to 8:40, okay, folks? And after that, if suppose you missed the macro or you saw the price changing the trend but there was no high probability setup, we will continue to look for setup at 8:50 to 9:10. But this time we are not looking for price to have a market structure shift, rather continue the trend that it will generate at 8:20 to 8:40. I hope you guys understood. If not, we will have more deep lecture coming very soon. Then we have 9:50 to 10:10. This is a trend continuation macro. Okay, so before I talk about that 8:50 to 9:10 macro, inside here price will set the liquidity for 9:30. Okay, inside that time period you will see price generating either sell side or buy side liquidity as a form of relative equal high or low. Okay, inside this time period price will generate that 8:50 to 9:10. 9:20 to 9:40 price will generate our high probability model that will clear out the liquidity that price generated at 8:50. Okay, so did you understood? At 8:50 price will generate liquidity for 9:30 volatility. Okay, at 9:30 price will clear out the liquidity that is generated at 8:50, and we will target this 8:50 to 9:10 liquidity inside 9:20 to 9:40 macro. I know it's maybe sounding like a little bit confusing because it's your first time, but trust me, I will take you guys through deep with a lot more examples in coming days inside these macros. Even today you guys will see like what you will expect to see forming here. So our next macro is 950 to 1010. It will be a trend continuation macro as well, because at 920 to 940 we are expecting to see a change in a trend. Either price will go towards buy side or sell side. It will very less of the time you will see price continuing a trend inside 920 to 940. Okay, so inside 920 to 940 our high probability is the market structure shift. 950 to 1010 is a continuation of the trend. 1050 to 1110 same trend continuation macro. We will be looking for price to change its shift, have a market structure shift inside 1020 to 1040. After that we will look for price to continue the trend at 1050 to 1110. So there will be a lot of setup, folks, okay, forming each and every day. Now you don't see it because you don't know what price is doing at exact these times. I'm sharing this logic with you all here. Then we have our fourth macro, 1150 to 1210. 1250 to 110 pre-launch macro, very high probability. Okay, why is it high probability? We have a launch macro at 120 to 140. So if sometimes what price does, does the early market structure shift. Okay, at 120 to 140 I told you guys that price does a market structure shift. But at 1250 to 110, sometimes like 40 to, I believe 30 to 40% of the time in my result, I saw price having the market structure shift early inside 1252 to 110. So how to know that price will have that early market structure shift inside the time period? I'll show you guys some setups. If the setup is forming inside this time period, that's the time you will execute without hesitation. If you lose it, don't worry, we have another macro 120 to 140. If price is not changing its trend, okay, inside 1250 to 110, we will look for our next setup forming inside 120 to 140. So pre-launch macro, folks, is very important. These are the two times that specifically with high probability we'll expect to see market structure shift happening. Okay, these are very common things but that price repeats, and you guys will see it repeating once you know it. And our last macro that I'll be focusing on is 350 to 410. This is our final macro. We have 220 to 240, 320 to 340. These are the times we are expecting to see a market structure shift happening, either of these times. Okay, and once the market structure shift happens inside 350 to 410, we are not expecting a market structure shift, rather a continue of a trend. So I hope you guys understood the macros that I shared and what we will be looking for inside these macros. These are the things that we'll be looking at these macro times. We expect price to break out from a consolidation. That means we are looking for a market structure shift, reach for higher time frame premium or discount pre-area. That means we are expecting expansion. Okay, expansion towards a direction. Our draw on liquidity, I'll share with you all what target we'll be looking for, so don't worry about that. Our third thing that we'll be looking at these macros is price to deliver liquidity as swing high or swing low to change a trend, and we will expect price to have volatility. That means low resistance liquidity run. Low resistance liquidity run will generate our high probability setup. We'll be avoiding every types of high resistance liquidity run, and if you don't know about these things, don't worry, I'll introduce to you what a high resistance and a low resistance liquidity run looks like inside our time distortion topic. So I hope each and every one of you understood these topics. We have another macro that I forgot to share, or it came up late. The fifth macro, 1220 to 1240. Same thing, we will be looking for price to change its trend inside here. So I hope everything is clear. So Madonna is asking, is these macros are applicable to every market? It's not. It's applicable only for stocks. Okay, stocks specifically on ES, Nasdaq, and Dow Jones. Other than that, you guys can look for. I didn't test it, but you guys can test if these macros works on Forex as well. The macros that works on Forex with high probability, with higher win rate, I will share. I already shared these macros in our private Telegram group, so you guys can go there and watch these macros. But the lecture on those macros will be later this month. So our next topic is on breaker and silver bullet. We'll be looking for the macros that will be inside the silver bullet. So a high probability breaker forms inside 3 silver bullet zone. There are 3 silver bullet zones for stocks. Okay, these silver bullets are only applicable to stocks. I'm not talking about forex or crypto, so don't confuse it, folks. These are the silver bullet time periods that we'll be looking at: 8 to 9 a.m. Eastern Standard Time, 10 to 11 a.m. Eastern Standard Time, 2 to 3 p.m. Eastern Standard Time. So we got one silver bullet from ICT, 10 to 11 a.m., but we have 2 other silver bullet time periods that where we'll be looking for price to form a fair value gap and then continue the trend. So the fair value gap lecture will be included in our inversion lecture. So today I'll only be sharing what type of breaker forms inside this time periods. Okay, we'll not be looking for inversion setup, but inversion with breaker, that's what we will be looking for. Separately inversion, we'll talk about this in our inversion lecture. We will not be looking at this 1 hour period randomly, but in specific time zones inside silver bullet. The specific time periods are. So listen, folks, we are not randomly, okay, we know about the silver bullet, but what we are doing, we are not focusing on this whole 1 hour time period. We'll be focusing on specific 20 minutes time intervals, and these intervals are 8:20 to 8:40, 8:50 to 9:10, 8:20 to 8:40. I already shared with you all that this is a manipulation macro. What happens inside this macro, folks? You already know it. We'll be expecting to see a change in trend. 8:50 to 9:10, we'll be expecting to see price continuing that trend inside the silver bullet time period. Other than the times that I'm sharing here, we are not trading there. Okay, that's the time you will see price doing high resistance liquidity run, means manipulation. Price will become choppy, it will have less volatility. We will trade only inside the time periods when we will expect to see high volatility. Why high volatility? Because that's when you will have less emotions. Either price will hit your stop loss in 1 minute, or it will hit your TP in 2 minutes. That's it. When price is having high resistance liquidity run, rather than generating profit, it will generate emotion inside you. So suppose you were supposed to like have a clean mind for your next setup, you will lose that state of clean mind because of the high resistance liquidity run. So that's the reason we will only be looking at 8:20 to 8:40, 8:50 to 9:10. Our second silver bullet is 10 to 11. So we'll be looking inside 10:20 to 10:40. We'll expect to see price changing its trend inside this time period. Then we will have another macro at 10:50 to 11:10. That's the period when we will be looking for price to continue the trend. Then we have our last 2 macros inside our silver bullet. Now last silver bullet, 2 to 3 p.m. Eastern Standard Time, which is at 2:20 to 2:40, then 2:50 to 3:10. 20 to 40 period is the time when we will be looking for price to have a market structure shift, and 50 to 10 period is the time period when we'll be looking for price to continue the trend. So it's not the theory that I'm sharing, the logic that I'm sharing here is it's not gonna work 100% of the time, but this is high probability. Okay, 80% of the time from my experience, it changes month to month, week to week. Okay, some days you will see price just continuing the trend at 8:20 to 8:40, but these are very less of the time. Most of the time price you will see price doing what I'm sharing with you all. So I hope you guys understood what I shared here. Breaker and silver bullet, these are all the times we will have models in our lectures. So I hope everything is clear here. We'll be moving towards our next topic. Okay, so before we do that, I'll be focusing on this specific silver bullet time period. Okay, this is the highest probability silver bullet among the three of it. Okay, so 10:20 to 10:40, 10:50 to 1:10, sorry, 11:10. What's the importance of 10 to 11 a.m. macro? Why is it so important? Why I'm telling you guys to focus here? Because we are ending the first 90 minutes of trading. Okay, so the 90 minute of cycles, I'll not teach you guys that here. It will be included inside my mentorship. But once price does a 90-minute cycle each of the time, it generates a setup. I'll be talking about the setup here in this lecture. The next thing that makes this silver bullet very important is that it's last hour before we get to launch New York launch. That's when price gets choppy. So before that, we expect to see volatility inside price. So our next topic is my high probability macros. Okay, I don't use all the macros that I shared. I don't look for setup all day in price. Rather, I look for setups at specific macros, the macros that I know will present what I look for. Okay, so this topic will be my high probability macros. So the first high probability macro that I use is 920 to 940. High probability for breaker and turtle. So very less of the time you will be seeing price forming an inversion setup here, but most of the time you will see 70 to 80%. This is the highest probability macro that I use, folks. Like, this thing repeats with 80%, 80 to 85% of the time you will see price repeating a breaker or a turtle soup setup inside this time period. Because why it repeats here so often? Why is that? So what I understood is that most of the people avoid this trading inside this time period. Either they are waiting for price to open and see what price did, okay, where it opened, and then take the entry, right? Most of the people do that, more than like 95% of the people. So 5% of us who follow what I'm teaching here, or we look for setup before the New York open, we see that price repeats very often two types of setup, breaker and turtle soup. So this is the highest probability macro that I use. The second one is 950 to 1010. What I found from my results is that price continues a trend inside this macro 65% of the time, because it's a trend continuation macro, right, folks? Because it's 50 to 10 macro. Each and every 50 to 10 in time interval is our trend continuation. 20 to 40 is our market reversal macro. But sometimes you will see price not following our logic, but the setup will be there even when price is reversing. So if you are confident in the setup, you can take it, because 35% of the time I found that market reversed inside this macro. But the high probability is the trend continuation. 1020 to 1040 is our silver bullet macro. 1050 to 11 trend continuation macro with high probability 70% of the time. 120 to 140 launch macro, mostly good for reversal. We'll be looking for specifically and only price to change a trend. We will not be looking for a price to continue a trend inside 120 to 140. This is very low probability. Okay, folks, this time period you look for price to have a market structure shift. A market structure shift. Then the last macro that I use, suppose I didn't find any setup, any high probability setup inside this time period, which is very rare, or suppose the AM session I'm avoiding completely, then on PM session I only trade these two macros, 120 to 140, 220 to 240, which I consider as a reversal macro or a change in trend macro. 50% of the time I found this macro inside this time period price changing its trend. Another thing important about this macro is that suppose price is not changing its trend inside 1250 to 110, then 120 to 140 macro, we'll be looking for price to change its trend or have a market structure shift inside 220 to 240. It's only applicable, folks, when price is not changing its trend inside these two time period. What time period? 1250 to 110. I'm repeating myself again. Then 120 to 140. If the change in trend is not visible, we will expect to see price changing its trend inside this time period. I hope everything is clear. These are very easy to understand, all based on theory. And at the end, I'll say to you guys that less is more. I will suggest you guys to focus on less macros, not looking for setup all day. There is macro, it doesn't mean that you will be looking for setup all day. When you limit your focus, your focus will improve. You will be able to identify high probability setup more. But if you look at charts all day, you will get confused, you'll lose your focus, and that's the most important thing, to keep having the focus in chart. So our next topic is all types of high probability breaker plus their formations. So there are 7 types of breaker that you will find which is high probability. There are 2 other types of breaker which is low probability, which will be included inside our next day. Okay, so today I'll only be sharing with you all the high probability setups. So our first lecture will be on the actual breaker. The second lecture will be on breaker plus fair value gap. So when price forms a breaker with a fair value gap, it comes in 3 formation. The first one is fair value gap swing high or low. The fair value gap will be either at the low of the breaker, okay, near to the swing low, or at the swing high. Don't worry, I'll show you guys the example. The second formation will be fair value gap inside breaker, okay, and the third one will be twin fair value gap and breaker. Price will have 2 fair value gaps inside one breaker. So when price does that, what you will be expecting to see, I will also share that. Our third lecture will be on breaker plus inversion. So here we have 2 types of formation with inversion at manipulation lag, okay, and the second one is at inversion at reaper, how to take early entries in using inversion. So this lecture will be included inside our reaper breaker. When I'll be talking about the reaper, I'll share like how to take early entries with inversion, or a entry with inversion, which will be inside the reaper. Our fourth topic will be on breaker plus order block. Fifth will be breaker plus volume imbalance. So when price forms a volume imbalance, it comes in 2 types of one type of formation, which is at volume imbalance at third leg. There are 3 legs of a breaker, okay, and each of the leg you can use to take an entry. I'll share with you all. So far I believe you guys only know about how to take an entry from a breaker using the third leg, okay. The first and second leg, I'll share it here for the first time with you all. Then we have breaker plus liquidity void, which is also a high probability setup. Then we have at the end breaker plus BPR, which is one of the most common pattern with breaker that you will see, and I'll share with you all like the 2 types of common BPR patterns. So now we are approaching towards our actual breaker lecture. So I'll be sharing with you all how a breaker forms, what are the rules, what are the things that you will look for to see a high probability breaker forming, or to identify a high probability breaker. So before that, I'll just answer some questions here. Suraj, he's asking, what is the higher time frame we need to see the setup? I'll discuss about that. What is the lower time frame we need to see the execution? What days we need to avoid the trades? What is the invalidation for the setup? Everything will be shared here. Suraj, you asked the questions early, so I'm just approaching towards our lecture, and every question that you asked will be answered in each of the slides separately. So what do we look for in price to identify a high probability breaker or just a breaker? There are 5 things that we look for in price to identify a breaker. So the first thing will be, we'll have to identify from where price will reject or get support from the higher time frame. So higher time frame PD area for support and resistance that goes with our daily bias. This higher time frame PD area can be fair value gap, inversion, which is a failed fair value gap, or a order block, etc. We'll be looking for price to reach to this premium or discount PD areas according to our bias, and then we will expect to see price rejecting from there or getting support from there with plus forming a breaker inside these PD arrays. So I include a pattern here. So suppose we have a as you guys can see, we have a price action here. Price had a market structure shift. As you guys can see, we have a high here. Price broke out this high, then the change in trend happened here, the market structure shift, then price continued the trend towards sell side. So when price does that, each and every single one of the time, folks, price will have a PD area that will either be untapped or unfilled. So if it's a fair value gap, then you will see like it's coming into the premium PD area and it's not unfilled, or you will see like a order block that price didn't use before. I will also teach you guys what order blocks to look at, which will be coming at later in our lecture. So the first thing we'll identify is the higher time frame PD area. I'm showing you an example here for shorts. So as soon as we identify the higher time frame PD area, we'll be looking for price to tap inside this PD area and continue its trend with a breaker forming. Okay, so our first rule is to identify a high probability PD area on a higher time frame from where price can reject. Okay, here I'm showing you an example of bearish chart, but if price is going up and you are expecting to see price like continue a trend towards bullish or buy side liquidity, it will wait to see price getting support from a higher time frame PD area. It's very easy to understand, and I'll talk a lot more about this in our coming lectures. The second thing that we'll be looking for is a clean swing high or low. So there are some rules to identify a clean swing high or low. So your swing will have to look at like this. Okay, so suppose you are looking for a bullish swing, then the candle that is on the middle, it will have to have a candle on the left and the right side, like on the upper side from this one. Okay, it will have to close a candle's body above here. It cannot close a candle's body below the middle candle or like below this candle's wick. It will have to, the candle on the left and the right side will have to close its body above the middle candle. Same goes for the bearish swing. We'll look for price to have two candles right next to each other, lower than the middle candle. I hope you guys understood. It's a very simple thing to understand. It's a very simple pattern. If you see this pattern in price, this is our second confirmation that price is forming a breaker. Once you identify a clean swing high and low with two candles right next to the middle candle, which will be lower, you will be able to identify a high probability breaker. So this pattern will be vice versa for longs. Okay, I wrote here shorts, which is incorrect. Vice versa for longs, you'll be looking for, as I told you guys, you'll be looking for price to continue its trend from a discount PD area if you are looking for buy. So the first thing, you will have to identify a higher time frame premium or discount PD area. Once price reach that PD area, you will be looking for price to reject with these clean swing high and low. Our third rule is that price will have to have a stop hunt. Later I'll teach it as a turtle soup. Okay, I'll teach you guys how to take an entry once price forms these swing highs. Okay, because when price is forming this swing high, is also forming a breaker setup, which will be a turtle soup setup, which will be included inside our turtle soup lecture. So our third rule to identify a high probability breaker is to have a stop hunt. So the second rule was to identify a clean swing high, which will be forming inside a higher time frame PD area. So we identified a clean swing high. This is a swing high. We have two candles lower next to this middle candle here. Then we'll be looking for price to go above this swing high if we are expecting to see a bearish breaker. As you can see here, price went above, did a stop hunt. Okay, so this is our third rule to identify a correct breaker. Our fourth rule is candles closing its body below or above breaker. This is the safest entry with breaker. I will also teach you guys there how to take the safe entries with breaker once I'm talking about the models. I'll also teach you guys how to take aggressive entries, one before price activates a breaker. But this here is our safest entry. If you are new, if you are just like learning about breaker from me for the first time, I'll suggest you to stick with the fourth rule here. So we have a clean swing high. We identified the swing high which formed inside a higher time frame PD area. Then price did a stop hunt. Okay, price formed a new higher high. We are looking for a bearish breaker here. The next thing that we'll be looking for is the price closing a candle's body below this last down close candles here. Okay, so do you guys see how I'm aligning the rules with the chart, with the pattern? First, we'll have to identify the higher time frame PD area. Then price will have to form a clean swing high or low. Low for the bullish breaker, high for the bearish breaker, and we have a clean swing high or low. Then the fourth rule is price will have to close a candle's body below the last down close candle prior to the move up that did the stop hunt. Okay folks, so as you can see, price did close the candle's body below this last down close candle, and as soon as price opened the next candle, you guys can take an entry. This will be considered as the safest entry with breaker. So this is the complete formation of a breaker. We have other formation. This formation is basically without any fair value gap, without any volume imbalance, order block. This is the actual breaker. If you see it in chart, this is the high probability. Our first this high probability, sorry, I didn't mention about it. So we'll be looking for this high probability setup to form on lower time frame. Okay, we'll identify the higher time frame PD area from where price will reject. Then we'll be dropping down to 3-minute or 1-minute time frame, and we'll be looking for price to have this formation or patterns on 1 or 3-minute time frame. The higher time frame can be 15-minute, hourly, and 4-hour chart. I'll talk about these higher time frames later. But that's it. We'll be looking for setups to form inside 1 or 3 minutes. I'm not teaching you guys to take entries on higher time frame. Rather, I'm training you as a scalper as I am. Okay, so we are looking for these patterns to scalp, not on higher time frame. The same pattern is applicable on higher time frame, which will be included in our later topics, but for now we are looking for scalping models. So our first rule is that we'll have to have a target, most important part of the business. Okay, first we identified the higher time frame PD area, price rejected. From there we drop down to the lower time frame, we identified a swing high, price did a stop hunt, then price closed the candle's body below the breaker. Everything is done so far, but we still have the most important part left for our breaker to become high probability. Okay folks, and this is the target. So where can you find the target? Target can be found on higher time frame. Even if you are executing on lower time frame, your target can be from the higher time frame. Okay folks, what are the targets can be? If you are a scalper, then easy low hanging fruits can be found on lower time frame. So I'm teaching you guys how to trade, how to scalp on lower time frame. So we'll be looking for our low hanging fruit targets that price can easily meet, like in 5 or 10 minutes max you will be done trading, and that's what I refer to as low hanging fruit, which can be found either on lower time frame. Specifically on higher time frame, we'll be looking for long term targets. When we are holding our trades folks, we'll be targeting higher time frame targets. When we are scalping, we'll be focusing on lower time frame targets. So what are the targets? The best targets are unfilled fair value gaps, unbeatable. If you see a fair value gap that is unfilled, which is below our bearish breaker, then we can target their unfilled fair value gap in it feels like it never fails. In my eyes, I found that if I identify the correct setup with high probability formation and there's an unfilled fair value gap, then price is going there, and that's what I know. The second high probability target is a BPR, and that BPR specifically will have to be unfilled. Okay, folks, the BPR, if price already used the BPR, okay, I'll talk about the BPR, like how to identify unfilled BPR and then a filled BPR. Unfilled BPR is our highest probability target. So once we identify a high probability unfilled BPR, we'll target that, and easily price will provide us minimum with each of these target, folks. That's the magic. Okay, that's the magic of looking at price with time, with certain rules. That minimum the setup that the price will provide is 2R. Each of the targets, I'll teach you guys how to get 2R from trades by having early entries, by having safe entries, aggressive entries. Each of the time you are getting 2R. Less than that, we are not talking about it. Okay, our third most important target is a relative equal high or low. This is the highest probability after unfilled fair value gap and BPR. And then the last one that we'll be targeting is unfilled new week opening gap and new day opening gap. So this topic will be separated from our today's topic. I'll talk about this in later in another day, how to target unfilled new week opening gap or new day opening gap, or how to use these to identify a high probability breaker. Okay, folks, so these are the 5 things that we'll be looking at price to identify a high probability breaker. I hope every one of you understood it. We'll have a lot more examples coming very soon. So I'll suggest you guys to take a screenshot, and in between this time I'll go and drink some water, and I'll come back and answer your questions. Okay, so I'm back, and you guys are asking, how about candle without wick? We will talk about it in our coming lectures. Should I consider swing high or swing low without wick? Basically not. Okay, what I'm sharing here is price is having candles with wicks, and that's the high probability. If you are finding a setup that formed without a wick, which I'll consider as a low probability, but most of the time, folks, without wick you will see it less. With wick you will see it most of the time. Okay, if price is hitting the higher time frame PD area, then that's the time you are looking for this setup in 1 minute. The golden boy asked, yes. Once price hits the higher time frame PD area, I'm dropping down to 1 minute, and I'm waiting for my macros to start the time periods that I shared with you all. I'm expecting to see price hitting the higher time frame PD area, which will be at premium or discount. Okay, folks, so you will have to have a general idea of what a premium and discount PD area. Okay, I'll not be talking about that here, but once you identify that, like the premium or discount PD area from where price can potentially reverse, you will be dropping down to 1 minute chart. You will wait for time, you will wait for price to get inside the macros that I shared, the rules. If price is trading inside a so manipulation macro, inside that higher time frame PD area, you will expect to see price changing its trend. If price is trading inside that higher time frame PD area in a trend continuation macro, then you will not expect to see price reversing from that PD area, rather continuing its trend or using that higher time frame PD area on lower time frame as support, which I will teach you guys how to do that. Is stop loss above the breaker or swing high? I'll talk about that very soon. Is the Judah swing part of the breaker? The Judah swing is not part of the breaker, and we do not call it as a Judah swing, rather a manipulation price lag. Okay, I know you were talking about this one. This is not included with breaker, but we can also take entries using this manipulation lag. Okay, this will be included in our Reaper fair value gap, Reaper breaker lecture. This is advanced theory, folks. What I'm sharing with you here is the safest entry that you guys can take. If you are very new, I will suggest you just to watch my advanced lecture that I'll be sharing here after a couple of hours. Okay, folks, because these are the safe entry lectures will take some time. So once I'm done with that, I'll be sharing about the advanced lectures, like how can you take early entries using manipulation, bet lag, then the breaker itself. There will be setup that will form here in this price leg. So you can also use this price leg to take early entries using breaker. But if you are very new, I'll suggest you, I highly recommend you to stick with these rules and follow these rules until you are seeing the breaker forming often. Okay, folks, so move on to our next topic, which is also about the breaker. We'll see like how it forms in actual chart. So putting it all together, this is our swing high that we identified. The next rule is the price will have to have a stop hunt, right? Price did a stop hunt. We have a swing high here, then we have a new swing high here. Price did a stop hunt. Now next, what we will expect to see price going below this down close candle and closing a candle's body below here. And as you can see, we identified these down close candles as our upcoming breaker. We will not be doing anything right now. Okay, folks, we will wait for price to go below, close a candle's body below here, and that's when we have a complete breaker. So this is the whole breaker formation, and I identified is the safest entry with the breaker. So now I'll be talking about the entries with the models, with the patterns that I shared with you all here. A regular breaker generates two type of entries. So what are these entries? Okay, folks, after price closes a candle's body below the breaker, at the next candle you can execute. This is gonna be considered as an advanced entry, because the safest entry is when price is retracing back to the breaker after some time. So the second entry the price will generate with a breaker setup is price retesting the breaker. Okay, so I'll show you guys the examples here. The second one, I consider it as a safe entry because when I started looking for breaker very first, when I was a beginner, executing at the very next candle once price activates the breaker was very hard for me. It took, I believe, like minimum 3 to 4 months for me to take the advanced entry. I was sticking with the safe entry. Okay, folks, so what will be the formation? For the first formation, we'll be looking for this type of formation. Price closed the candle's body below the breaker. Now we'll be looking for what? We'll be looking for price to generate a new candle that will open lower below these down close candles. Okay, folks, and as you can see, price closed the candle's body below the breaker, and at the next candle price went up. As you can see the wick, okay, folks, here price went up. So as soon as price was going up and retesting this breaker, it will execute, and this is what I'm considering as an advanced entry. A lot of folks who are new here don't expect to from yourself that you will be able to take this type of entry as ASAP. It will take time for you to see these type of entries, but this is one of the highest probability entry that will give you more profits because you are executing early. Today, folks, I shared an execution with you all on my Telegram, public Telegram, by using 950 to 1010 macro. If you guys go there and zoom in a little bit, you will see I use the same exact logic there to execute. Okay, so this pattern repeats most of the time, and this is our second formation. Like once price closes a candle's body below the breaker, you will execute at the second candle. Okay, but if you are not getting the chance of execution, you will wait for price to retrace back to the breaker and then going down. Okay, folks, like this here, price is going down, price went down, then price came back up, retested this breaker, and then it's going down again. So this formation, I consider it as a low probability. Okay, folks, why? Because once price is coming back up, what it's doing is that it's most of the time it's done providing liquidity towards the sell side. So the safest entry here is the aggressive entry, okay, to execute when price is closing a candle's body below, and at the next candle when price is coming up, when this candle is bullish, okay. This candle was bullish when price was retesting this bearish breaker. So as soon as price is entering inside this candles zone, okay, we are not measuring it from the week to week, rather we are looking for price to tap inside the candles body. Why body? Because that's where the liquidity is. Most of the liquidity is there. Okay folks, so this is our first chance of entry, and we'll be focusing in this type of entry. So here is your stop loss with your entries. So the first entry, suppose you didn't miss it, you took it. Second time price came back up, you can execute again with a stop loss above the candle's body of the breaker, not above the week's high. What's the logic behind it? Okay, because if price is going above the mean threshold, okay, you will measure this breaker, and if price is going above the mean threshold, price will not respect this breaker most of the time. So you'll put your stop loss above the candle's body, because this is our last line of defense. Okay, if price is going up, it will be breaking 3 PD arrays, which will be this breaker, this up close candle, last up close candle, and a PD array will be here. So 3 PD arrays. Once 3 PD arrays fails, you should be closing your trade. So this is the safest level to put your stop loss. We'll discuss more about how to put stop loss in different scenarios in our coming lectures, but for this, it is the highest probability, folks. Once price generates a breaker without any other PD area, if you guys look closely, there's no other PD area for you to take entry. Okay, there's no fair value gap right next to the fair breaker. There's only the breaker itself without any PD area. So once price has with no PD area, you will expect to see taking this kind of entries at the second candle, and when price is retracing back to the breaker, you will be expecting to see price going lower or continue with trend, but this is the low probability. You will train yourself to take entries once price closes the body, and at the next candle once price is retesting the breaker. What time frame do you use when you want to enter a breaker? 3 minute and 1 minute. 3, 2, 1. These are the time frames that I look for breakers to form. These setups that I'm showing here, folks, these are the setups I look for to form inside lower time frame. As I told you guys in the beginning of our lecture, what I'll be sharing here with you all today is mainly for scalpers. The same thing works on higher time frame. The same pattern will repeat on higher time frame, but the lower time frame execution is the highest probability here. So Jai is asking if it does not clear a previous stop hunt, but reverses and forms a breaker, is that a low probability entry? So that's a very nice question, Jai. So if price don't have a stop hunt, we will not consider that as a breaker. That will be a mitigation block, and I will also talk about it inside our topic that I shared, SMT and mitigation block. So that will be a low probability setup. There are rules to follow to take entries like that, which I will not talk about here. I will only be talking about the breaker that forms with a clean stop hunt. Without a stop hunt, that's a mitigation block. So if you are having like questions like that, so these are the topics that I'll talk later about, folks. So just be a little bit of patient, and you will see me talking about when price has no stop hunt, how to take entries on that. Any London macros? Nope. I'm only sharing high probability. What I consider as high probability London session is something that I don't consider as a high probability, rather a very low probability market. On London session, I do not trade on London session, so everything that I'm sharing here is applicable to London session, but I'll be focusing on my lectures for New York session. So Amir is asking, where should price close the candle's body? Below the wick or the candle's body? below the wick Amir. So we have the wick here, and as you can see, price closed the candle's body below the wick. If price is closing a candle's body below this candle's body right here, below this last down close candle, we will not be using this as an entry. Rather, we will wait for price to go below the breaker, and at the next candle we will execute. Okay, so on Burson S is asking, this breaker is forming before macro or after macro or inside macro. This breaker can form before macro. Okay, so if price is forming this breaker if price is forming this breaker before our macros, then you will see price closing a candle's body inside our macro. That's the must rule. Okay, price will do it. Not 100% of the time, but with a high probability, you will see either price closing, activating a breaker inside macro, or inside macro it forming a breaker. If price forms a breaker outside of macro, then it will activate the breaker inside the macro. If there's no breaker inside our macro, will not look for any trade. If price didn't form any breaker before macro, we'll expect to see price forming macros inside our breaker inside our macros. I hope it's clear. Yes, the ideal target is 221. This is the ideal target, but I'll teach you guys how to target more in coming topics. So we'll move on. So tips on the breaker. Okay, I showed you guys the formation of the actual breaker. Now I'll share one tip that makes the breaker high probability. Best reaction from a breaker will happen from the last up close or down close candle. Okay, here as you can see, I wrote not candles. Okay, from one specific last down or up close candle. Up close candle is we will consider the up close candle when we are looking for a bullish breaker to form. We will be considered to look at the down close candle when we are predicting to see a bearish breaker. So here's the example. We have a higher high, a new higher high. Price did a stop on, price closed the candle's body below the breaker. You can execute here. Okay folks, I already showed you guys how to execute here, and then once price retraces back to the breaker, you guys can take another entry here targeting this low. Okay, but the best reaction from the breaker will be happening from the last down close candle. All of these candles are our breaker, and we'll be putting our stop loss above here, not above here, but because we don't know if price wanna do a little bit of deeper premium retracement. Okay, if price is coming back up and just sitting here, we are also safe. That's the reason we'll be putting our stop loss above the breaker, not here, but we'll be expecting to see the best price rejecting from the last down close candle. If it's a bullish scenario, then it will be from the last up close candle, vice versa of this thing. Last down close candle best for expecting low resistance liquidity run. So if price is supposed not closing a candle's body above the last down close candle, we will expect to see low resistance liquidity run. That means what? Price hitting our TP aggressively. As you can see here, we have a very low resistance liquidity run, best for aggressive delivery. If price is rejecting, if price is getting resistance from the last down close candle, this means we are in a high probability scenario, and price will deliver liquidity with speed, and this delivery will consider it as aggressive delivery. Sometimes you will see our mentor sharing executions, and there he is referring like I want to see speed now. So this is the time when you expect to see speed in price. Once price is going up, hitting the breaker and then rejecting, that's the time period you expect to see speed. If this exact formation is happening in price, folks, and trust me, you'll see the same exact thing forming here. Nothing like changed or anything. Okay, if price has no other PDRA here, here, or here, this is the reaction that you are expecting. This is the highest probability breaker here. So I hope you guys understood. Do you guys have any question regarding what I'm sharing here? Please don't ask like the questions that I'll answer later. What I'm sharing with you here, ask the questions based on these topics, because most of the questions that you guys are asking will be answered in our future topics. Uh, S Esteban is asking HYDRA, so we have to wait for a candle to close below the wick of the last candle of breaker block. Yes, this is the last candle, and we'll expect to see price closing a candle's body below the breaker, and at the next candle we'll be able to execute here as I showed you guys in the previous templates. And if you miss taking entry here, this is the highest probability entry. This right here is a low probability entry, okay? But if you miss it, and if you saw like price rejecting from the last down close candle, you can execute either at this candle or at this candle, because as you can see price still is going lower. And if price is not closing, listen carefully folks, if price is not closing a candle's body below the above the last down close candle, price will deliver with high volatility. That means what? Price will move a lot. So this becomes our highest probability trade once price creates this type of formation. Now we'll move on to our next scenario, next topic, which will be breaker plus fair value gap. So far I showed you guys that how to look for a breaker when breaker has no PD array next to it. Now I'll be sharing with you all when breaker has a PD array right next to it, and this PD array is fair value gap, and we'll be looking for this fair value gap to form at the discount leg of the breaker. So as I told you guys that a breaker with fair value gap has two types of formation. A fair value gap will either form in the premium or in the discount PD array. And the second formation is that price will have two fair value gaps with the breaker. Okay, so I'll be sharing the examples with deep details here. Now we'll be talking about fair value gap at fair value gap with breaker at discount. This is the highest probability among each of these formation. This is the highest probability. So this is the pattern that we'll be looking for. Okay folks, I'm sharing a pattern here. I'll share the actual chart later once I'm done with explaining the formation. So we have a higher high here, then we have a new higher high. So we expect to see what? Price forming a clean swing high here, then price going above, clear, doing a stop hunt, right? Or a Judas swing if you guys want to mention it like this, and then price coming down here before price goes below the breaker or close a candle's body below the breaker. We'll look for a fair value gap forming here. Okay, exactly here. So here this will be our last down close candle, and this will be our breaker. Here we'll look to see a fair value gap forming right next to the breaker, and this is at the discount leg. Okay, later I'll show you guys that a fair value gap that will form here at the premium side of the curve, but now I'll be sharing with you all the fair value gap that is forming here at the discount leg, which is the highest probability when price is coming with a breaker and a fair value gap. So once price does generates a breaker, you will expect to see price doing an immediate rebalance. Okay, just like I showed you guys before. Let me take you guys a little bit back. What do you guys see here? Okay, price closed the candle's body below, then price at the next candle came back up, then it went down. So when price is doing this kind of things, I refer to it as an immediate rebalance. Once price does that, it's the strongest sign from price that it wanna continue its trend towards sell side liquidity, or you are right predicting the breaker. So we'll be expecting to see the same formation happening here. price closing a candle body below the fair value gap, then coming back up, retesting the fair value gap immediately, and then rejecting towards the buy side, sorry, sell side liquidity, as it's a bearish formation. Okay, and another rule that we'll be following here is that price should not go above or close a candle's body above the fair value gap. If price is closing its candle's body above this fair value gap, which I'll be showing you guys later in the chart, we'll put our stop loss here, so we are safe. But if price is going above the fair value gap and closing a candle's body above it, know that you are wrong predicting the setup. I'll suggest you to close the trade rather than hoping as soon as price does closes a candle's body above the fair value gap. Price can go above, have a week, okay, above the fair value gap, but the bodies of the candles should stay inside the fair value gap. Fair value gap here specifically forming a discount according to the dealing range inside the breaker. So what is the dealing range? From this high to this low, this fair value gap is coming at discount, right? And this is the highest probability. Once price forms a fair value gap premium, this becomes a low probability setup, but that setup also works. This here is our highest probability setup that price forms with a fair value gap. And I already shared with you all like how to identify a high probability breaker. We have every rule matching here. Price has a swing high, price did a stop hunt, price has last down close candles here, price went below, generated a fair value gap, retested the fair value gap, and now going lower. One of the highest probability breaker here, folks. This is one of the highest probability formation. So our next pattern that I'll share with you all is price forming a fair value gap at premium. Price also forms fair value gap with breaker at premium, and the template will be like this below. The fair value gap that we saw last time, it was at the discount range, it was here. Now we are looking at a fair value gap that formed at premium according to the dealing range. What is our dealing range? From this high to this low, this fair value gap is coming here. So what will be the formation? We have our breaker here. First we'll have to identify if we have a clean swing high. Once we identify that, we'll look for price to go above that swing high and do a stop hunt. Then aggressively price should come down, form a fair value gap here, okay folks, and then going down and retracing. So once price has a premium fair value gap, what we are expecting, we are not expecting to see an immediate rebalance. What we are expecting to see is price leaving this fair value gap unfilled, then going down, generating relative equal lows down here, folks. This price leg, we want to see price generating relative equal lows and then coming back up, hitting this fair value gap, and then going down. Listen carefully, folks, what I'm talking here. I'm not saying to you that we want to see immediate rebalance, okay? We don't want to see price retesting this fair value gap immediately, rather leaving this fair value gap unfilled, going down, then coming back up. At the same time, price will have to generate relative equal lows down here. When price is moving up, hitting this, reaching for this fair value gap at premium, we want to see price having relative equal low down here, okay? Specifically, I'm not talking about unfilled fair value gap or anything. Specifically, I'm talking about relative equal lows forming here. So fair value gap and premium, you will expect price to reach there before continuing its trend, okay? Price should leave this fair value gap unfilled, then price should go down, price should generate relative equal lows once it's coming back up. So if price is filling this fair value gap, suppose before going down price generated this fair value gap and is coming back up, doing immediate rebalance. I already talked about what immediate rebalance is. We will not consider it as a high probability entry once price comes back up here, okay folks? While price reaching for the premium fair value gap, you will expect to see price building liquidity as a form of trend line liquidity or equal high or equal low. So there are two types of target that price should generate before reaching here, or once it reaching here. Either it should generate a relative equal lows, okay, or a trend line liquidity. Trend line liquidity is also a form of relative equal lows, because when price generates trend line liquidity, price generates swing lows very near to each other. So we'll be expecting to see price forming relative equal lows, and that will make this fair value gap a high probability fair value gap with breaker. Why? As I answered, this will increase the odds in your favor, means it will be a high probability setup, as we won't target blindly but with high probability targets. Okay, as we are not just targeting, like we are not expecting for price to return continuous trend once it hitting the fair value gap. Rather, we are expecting to see price generating relative equal lows that we can target, okay, and hitting the fair value gap and then coming down. Do you guys remember the fifth rule of our breaker? The fifth rule was we will have to identify a clean target. Okay, before we identify a setup, we will have to identify a clean target, and that's what makes our fair value gap at premium a high probability fair value gap. What we will avoid here, we'll be avoiding a setup that has an immediate rebalance. What we'll be expecting here, we'll be expecting to see price leaving this fair value gap unfilled, going down, coming back up, generating relative equal lows or trend line liquidity, very specific rule folks, and then coming back out down, and these relative equal lows, once we see that price formed, this will make this setup a high probability setup. Now I will show you guys when price will have two fair value gaps at the same lag. Okay, and after that I will take you guys on the actual chart, and we will see how price forms a fair value gap at discount, then premium, and then twin fair value gap. A fair value gap can also form 2 times in the same price lag with a breaker on it. When price generates 2 fair value gap in the same price lag, how does it look? I'll be sharing with that here. What is the high probability entry here? So price now has 2 fair value gaps here, folks. The formation, this is the formation. Okay, folks, before I shared with you all when price forms a fair value gap at discount, now price is forming a fair value gap at premium. Sorry, at price forming both of the fair value gap at the same lag. Okay, and price is forming it like this. I'm showing you just the pattern here, so don't lose your patience. I will share the actual charts, how it will look when price generates 2 fair value gaps or 1 fair value gap at premium and discount. I'm just sharing the logic here, which will give you confidence when you look at chart with these patterns, folks. So what's the high probability entry here? When price comes back to the discount fair value gap, you will take your entry. As soon as price hits the body, breaker body inside this discount fair value gap, you will execute. Okay, you will have a stop loss above the breaker, okay, above the breaker's wick. This time we are putting our stop loss not above the breaker body, because we have 2 fair value gaps here. Price can easily come up to fill the fair value gap at premium and then go down. Okay, and how will we know that price will come up to the premium? I shared with you all that if price is generating relative equal lows down here, we will expect to see price reaching for the premium fair value gap. If price has no relative equal lows but a target like far from it, we will expect to see price rejecting from the discount fair value gap, but this is the highest probability scenario. Okay, you can take an entry here once price hits the fair value gap, sorry, the breaker, okay, the candle's body. Once price hits that, you can execute here. You can take another execution here if you see price formed relative equal lows down here, and your stop loss will be above the candle's wick. What's the difference? When price has a fair value gap here, only a fair value gap will put our stop loss above the candle's body, but when price has 2 fair value gap right next to each other and price has a fair value gap like at premium, will put our stop loss above the candle's wick. I hope it's clear. Please increase your mic. So folks, is my microphone, can you hear me like clear? Please let me know in the chat. Um, Thank you, folks. So if the sound is low for you, I'm not gonna change the settings, folks, because I spent a lot of times to put the perfect settings so that you can hear me loud and clear. And these are the settings that I believe is best for you. Because if I increase the sound, my voice will get distorted, then it will complain again. So just increase the volume or listen to my lectures in your computer. I hope you will enjoy it. So I hope everything is clear with twin fair value gap, the fair value gap at discount, the fair value gap at premium. Okay, now I will take you guys and show you the actual formation on chart. And before I do that, we still have some things to discuss here. High probability entry here is at the fair value gap at discount. I already shared you guys the fair value gap that is here. We will not wait for price to reach for the premium fair value gap. Price can do that, but we will take our entry as soon as price hits the candle's body here, okay, at the discount fair value gap. This is the highest probability, but we will leave room for price to go up and fill the premium fair value gap. That's the reason we are putting our stop loss above the wick of this breaker. In other scenarios, we'll put our stop loss above the candle's body, and stop loss must be above the candle's breaker wick. I wrote this because you guys can take the screenshot and later print it out, because there's a lot of slides, folks. When I was making these templates and the slides, I felt like I'm writing a book. So that's the reason I wrote everything, even after I'm saying the things here, so that later in future when you review these things, it will be beneficial for you. So you can either take the screenshot, or if you want to get like the high quality, you can purchase these slides from me. So why we are putting our stop loss above here, I already discussed about that, because price can also reach for premium fair value gap. So if it does that, you are safe. And if price is not respecting 3 PD arrays to get rejection, you are wrong anyway. So you will not put your stop loss, folks. Listen carefully. You will not put your stop loss above the swing high here. Why? Because how many PD arrays do we have here? We have a fair value gap. We have a breaker here. That's a fair PD array. We have a fair value gap at discount. That's another PD array. Then we have another fair value gap at premium. That's the third PD array. So if 3 PD arrays are failing together to send price lower, you are wrong anyway. So why put your stop loss here and take a little bit more loss? Why? If you are putting your stop loss here, that's the safest stop loss that you can manage. No, the stop loss is not above the 0.25 of the breaker of the fair value gap, but it is above the candle's wick. I'll show you guys right now. So breaker plus fair value gap, which will be at premium and discount, plus twin fair value gap on chart. First, I will show you guys the breaker that has a fair value gap at the discount. This is our high probability scenario, and that's the price action that we'll be looking at when you are looking at your chart. So we have a swing high here, right? We have another swing high that cleared out liquidity from this swing high. Then price went below these candles, right? It generated a fair value gap here. So it has specific rules, folks. Where should price generate the fair value gap? Right next to the last down close candle. Listen to me carefully if you are missing things out, or you can listen to this again. Everything will be recorded here. This fair value gap should, must, I'm using the word must, it cannot form above the breaker. If it's forming above the last down close candle, that fair value gap is at premium, and we will have different rules. When the fair value gap is forming like this alongside with the last down close candle of this breaker, this is our high probability. So our entry will be as soon as price hitting the fair value gap, as soon as price hitting the fair value gap plus the breaker's body, not the wick. Okay, you can take the execution here once price hits the wick. There's nothing wrong with that, but I'm sharing with you all the high probability scenarios, the scenarios that will put odds in our favor. Okay, we all are gambling here. I cannot guarantee you that 100% of the time price will price will hit your TP with this formation, there's still risk, so we'll have to consider that risk, and that's the reason I'm sharing only the high probability scenarios. The same pattern with this same exact candle will repeat, folks. Same, okay? The size of the candles can be different, but the same thing will repeat. You guys will see it forming in the chart, or if you guys saw me trading in front of you on YouTube, I look for these same things on chart. Or if you have experience with breaker, you already saw a price forming the same exact pattern. Okay, folks, the fair value gap will exactly be right next to the last down close candle, and this is the highest probability. And as you can see, price hit the breaker, your entry can be here or at the next candle. If you are patient enough, you can execute here or at the candle that is forming here. It's also coming back up, so price is giving you chance to pyramid here. Okay, folks, these are, if you are very new, I'll suggest you not to take pyramiding entries, but if you have experience, these are the opportunities that price will give you that will help you to generate more profits. Now I'll be looking for the candles that will form in the premium. So this is the pattern that we'll be looking at when price has a fair value gap at a premium. Okay, folks, so here, as you can see, we have a fair value gap which is inside the breaker. So the rule is price will have to form this fair value gap inside the breaker. The fair value gap cannot be above the breaker. If price is forming this fair value gap above the breaker, suppose price has a little bit more candles here, 1 or 2 candles, and the fair value gap is coming here at this level, we will not take this trade from this fair value gap. Rather, we will take this trade as soon as price closes the candle's body below. Okay, folks, here as you can see, we have this fair value gap inside the breaker. Price went down, right? We expect to see price coming back up, and when it's coming back up, what we expect to see, price generating relative equal lows. Okay, and what do you see here? Once price was coming back up, it was generating relative equal lows right here. Okay, so first let's read the tips here. When price is reaching for fair value gap at a premium, expect the delivery in high resistance liquidity run and reversal in low resistance liquidity run. So the low resistance will create the high probability for us. Here, as you can see, price is having a high resistance liquidity run. Okay, why is it a high resistance liquidity run? Because we know that price is reaching there, okay, reaching for this fair value gap, but at the same time we want to see price generating relative equal lows. When price is having low resistance liquidity run, it won't generate relative equal lows or highs. When price is having high resistance liquidity run like this, when it's struggling to reach a pre-DRA and is generating a lot more candles, we consider it as a high resistance liquidity run, folks. And when price does that, it generates high probability target, and that's the reason we'll expect to see price having high resistance liquidity run once it's reaching for the fair value gap at premium. Okay, folks, these are the rules that I shared with you all when I was talking about the pattern. We'll be looking for price to have this exact scenario. Okay, the wicks can be lower, a little bit lower or higher. The canvas body can be a little bit bigger or suppose smaller, but this is the formation that we'll be looking in chart. Okay, this is the same formation that we'll be looking once price does a stop hunt inside a higher time frame PDRA. Once you were able to identify that, it will be dropping down to 3-minute and 1-minute chart, and you will look for this formation. You don't know what formation that price will have. Okay, price can have no fair value gap. So if price has no fair value gap, we'll look for another setup. I shared with you that. Okay, we have other rules. Once price has a fair value gap at discount, we have other rules. Once price has fair value gap at premium, we follow different rules. So we have our high resistance liquidity run here. We have relative equal lows down here, plus trend line liquidity. If you put a trend line here, you will see that price is respecting the trend line liquidity, and that is making our trade a high probability setup. And here, as you can see, price is doing the low resistance liquidity run. Okay, folks, so I hope everything is clear here. Once price is reaching for the fair value gap, we will expect to see price generating relative equal lows, having high resistance liquidity run. Once price hits the fair value gap, we will expect to see price dropping aggressively, clearing out these relative equal lows with low resistance liquidity run. And this is our highest probability scenario. Our entry at this formation will be here, okay, as I shared in the pattern in our previous slides. Our entry will be here. Our stop loss will be above the candles wick. Do you guys remember me talking about putting your stop loss above the candles wick? When will you put the candles stop loss above the candles wick? When price has a fair value gap at premium. When price has a fair value gap at discount, you will put your stop loss above the candles body. When price has a fair value gap at premium, you will put your stop loss above the candles wick. Okay, these are the very basic knowledge. I'll take you guys in the advanced knowledge very soon, but first you will have to know what price does when it's forming this type of repetitive formation. The third formation is twin fair value gap and breaker, and how it looks in the actual chart. This is how it looks in the actual chart. So we have our breaker here, we have our clean swing high that formed inside the higher time frame PD area. Then price did the stop hunt with clean swing high, folks, right? And then price came down, generated a fair value gap here plus another fair value gap at discount. So when price does that, you will look for price to do the same exact thing that it did here, but rather your entry this time will be here, okay? Because sometimes I saw price rejecting from here, sometimes I saw price reaching for the premium fair value gap and rejecting immediately. There are rules. Price will have to form relative equal lows when it has two fair value gaps. When it has fair value gap at premium, this rule is different when price has fair value gap at discount. We will not be looking for price to have relative equal lows, but if price is generating relative equal lows, that making our trade high probability. If not, we are expecting to see immediate rebalance. Okay, immediate rebalance is like this: price coming back up with a little retracement here. As you can see, price having a long retracement, price went down, then coming back up, generating relative equal lows, and we expect to see price forming relative equal lows when price has either fair value gap at premium or two fair value gaps like this. So this time we are going to be putting our stop loss above the swing high, okay, here above the breaker swing high, not this swing. I hope it's clear, because if price is going above this fair value gap, this breaker, and this fair value gap, which is at premium, price is not respecting three PD arrays at the same time. So when price is failing to respect three PD arrays, that becomes a low probability setup. We will not take this setup anywhere. We will not hope for price to hit our TP, rather we'll close our trade, and that's the reason we are putting our stop loss above this candles wick. So the tip is here, the high probability here is price rejecting from fair value gap at discount, but we leave room for price reaching higher. So this is the end of this slide, this formation. This is the same thing price does, and these are the same pattern that you will be looking for. Nothing more, nothing less. You will be looking for this same exact pattern, okay, folks? Like when you go to sleep, before you go to sleep, look at these patterns. These are the same patterns that price will repeat. Exactly same. The only difference can be is just a little bit bigger wick, a long wick, or a little bit bigger candle. That's the only difference. Price will have the same high resistance liquidity run. Price will form relative equal lows just like this, and that's what makes our setup a high probability setup. If you guys have any question, feel free to ask me here. MCO is asking what to do if price forms a bullish fair value gap while retracing for the premium fair value gap. We will not look for buy from that bullish fair value gap, okay? Rather we will look for price to reject from the premium fair value gap. I share some specific things, folks. I'm saying again, listen carefully. We are not looking for any entries here. Once price is retracing higher, we are not looking for any entries. Rather, we are looking for price to form relative equal lows here. If you look a little bit closer, you can see we have a fair value gap here that price respected, but we are not taking it as an entry. Rather, we are waiting for a high probability entry that price will generate once it hits the premium fair value gap. So Hamid is asking how many time you take trades if the first setup failed and later another breaker formed in the same higher time frame fair value gap. Price will only form this type of setup once, but if price is forming different types of setup, different type of breakers at the same inside the same higher time frame PD area, we will consider it as a time distortion. I told you guys to wait. Okay, you guys are asking questions early. Every question, every type of question that you can think of, I already thought about it. Okay, how do you think I am making profit with this setup? I had the same exact question in my mind, and I looked in chart and I found the answer, and I'll be sharing the answer with you all in later chart. So when price forms many breakers, okay, inside a high probability, inside a higher time frame PD area, that time we will look for price to go inside our macro. Okay, each of the setup that we are looking for, each of the formation that I shared here is we are looking for a setup to form inside the macro. Okay, we are expecting to see price hitting this fair value gap inside macro, inside macro here. Price can form this setup before the macro, but the execution or price will tap inside the fair value gap will be exactly inside the 20-minute interval that I shared with you all. Okay, so if price is going inside that time period and hitting the fair value gap inside macro, you won't hesitate, you execute, and after that if price is forming another breaker, or suppose your breaker failed, you do not execute, you wait for another macro to show up, and that's the time you execute. And I'll be talking about these things later in later topics. Do you explain your view about the difference between LR and HRLR? I have the different view. What the view that I have, I already shared here. Go back and listen carefully. I hope you will understand. So the third formation that we'll be looking here is breaker plus inversion. Okay, Rahul is asking on the example 2, we could take entry after price closes below the breaker and reaches it again. What did I say, Rahul? Did I talk about price coming back, taking aggressive entry? No, I told you guys that we wanna see price coming down, going down, okay, and generating relative equal lows. Very specific things, folks. I'm not sharing a lot of things here. We want to see price forming relative equal lows here. If price do not form a relative equal lows, we are not taking this trade because we do not have high probability targets. We will wait. If price is coming back up, if price is not coming back up and retesting the fair value gap at the same time doing an immediate retest, then we will not take this trade. It's simple as that. This is the high probability scenario that I'm sharing. The scenarios that you are referring to me is not high probability scenario. At that time you will not take it as an entry. You will only take entry once price do this, once price generates relative equal lows. Okay, you will take the entry. So I'll be moving forward to our next lecture. So Jai is saying in HRLR price is moving against a huge expansion without any swing high or swing low. In case of low resistance liquidity around price clear, swing high or swing low where there is liquidity. The way you are saying, Jai, I do not see high resistance and low resistance equity like this. A lecture on high resistance and low resistance equity will be inside the topic of time distortion. There I'll talk a little bit more about when we expect high resistance and low resistance equity run. Okay, we can predict when price will have high resistance and low resistance equity run, and price can also have a candles week and have a high resistance equity run. There's no rules such as this, so I'll clear that in our future topics, Jai. So our next topic is breaker plus inversion, a new opportunity. Why is it a new opportunity? Once a fair value gap fails, we consider that failed fair value gap as an inversion to look for new setups. So even that fair value gap failed, it will still create opportunity for us. So a failed fair value gap is equal to inversion, generates two types of setup with breaker. Breaker plus inversion generates two type of formation. What are these formations? Inversion at manipulation lag. What is the manipulation lag? The lag that does the stop hunt. The second one is inversion at Reaper, which will be included on our Reaper lecture. So the first formation that we'll be looking at is inversion at manipulation lag. We'll be focusing here at the price lag that did the stop hunt. Okay, folks. So what is the lag here? We have this higher high here, then price went down, generated the breaker, okay, and then price came up, cleared out the swing high here. This is the lag that we'll be focusing. We will be focused inside this price leg here. So far I shared with you all that how to take entries from this leg here, right? If I take you guys a little bit back, so far I shared with you all that how to take entries at this leg of the price using breaker. Now I'll share with you all that how to take entries using the manipulation leg, because there's also PDRA forms, okay? So we will focus inside here for price to form a inversion. We'll focus here for price to form a fair value gap. Later in time, when price is coming down here, price is going below the breaker, we will use that failed fair value gap to take entries. Our high probability inversion will form near to the swing low of bearish breaker. Okay, our high probability inversion will form here, right exactly here, near to the bearish breaker. So this is the formation in actual chart. As you can see, we have a clean swing high here, price went above, and when price was going up, it formed a fair value gap here. So this fair value gap here is important, folks. It will give you insights on like if price wanna use this breaker to continue its trend towards downside, or if price don't wanna use this breaker to continue its trend, you will get support from this fair value gap. But what we are looking here is for this is that we are expecting to see this fair value gap getting failed, price closing a contest body below this fair value gap, doing immediate rebalance here, and then retracing lower. So the two types of fair value gap that form, the first type is that the fair value gap will form at the manipulation lag. The second type of formation is that price will form the fair value gap here at this here near to the swing high of the bullish breaker, and I talked about this in our previous lectures. So inversion and manipulation lag. Now I'll take you guys deep inside what to look for, what to expect here. How will I know this inversion will support my trade idea? That's a very nice question, folks, right? Because that's a bullish fair value gap, that's a busy buy side imbalance, sell side inefficiency. So how will you know the price will not respect it as a bullish fair value gap, rather that fair value gap will fail and turn into inversion? So here are our rules. Price will have to generate the inversion near to the swing high or low. Price will have to go through this inversion with speed. price will have to generate a new fair value gap alongside with the inversion from the manipulation lag. So now here I'm showing you guys a example on a bullish fair value gap. As you can see, we have a low here, we have a lower low here. These swings are very clean, and we are expecting to see a bullish fair value gap, sorry, a bullish breaker forming. Okay, so where is our breaker here? Last up close candles. These are the last up close candle which we'll be considering as a breaker, and a fair value gap formed right next to this breaker, inside this breaker. So the rule is, folks, price will have to generate a fair value gap inside the breaker. Suppose if there's 2 or 3 more candles and price is generating fair value gap here, we will not consider that fair value gap to take it as an entry, rather we'll focus on this breaker. But if the fair value gap is forming inside the breaker right here, right, we will look for some formation like this. We will expect to see price going up inside, price closing a candle's body above this inversion. So once price does that, we will know the price wanna continue its trend towards buy side. It wanna respect this bullish breaker. That's how you will know that price wanna continue its trend towards buy side. Once price closes a candle's body above the inversion, okay, above this fair value gap. If price is not closing a candle's body above this inversion, or suppose price is having a candle here but the wick are reaching up there, you will not take it as an entry. Price will have to must close a candle's body above the inversion, and that's the time when our high probability scenario generates. So as you can see, it's this candle is following our rules. Our second rule is price will have to go through this fair value gap with speed, and as you can see, price did that. Price generated a new fair value gap with inversion. Okay, price also generated a fair value gap here, which you will see coming later. So how will we manage our stop loss and entry with this inversion? There are 2 entries we can take with inversion inside breaker. Once price closes a candle's body above or below inversion, you can execute at the second candle, just like I showed you guys at the actual breaker what we will do. So we have our pattern here of bullish breaker. We have a lower low, new lower low. So these up close candles are becoming our breaker here. We have a fair value gap here that later turned into inversion. This price pattern is following our rules. We want to see price closing a candle's body above. Price did that. We want to see price going through this fair value gap with speed. Price did that. Okay. Next we want to see a fair value gap forming here alongside with the inversion, and as you can see, so the fair value gap that I talked about, this fair value gap here can also form or it can't. Okay, if price forms that fair value gap, we will expect to see price stepping inside the fair value gap here, and there will be your entry like this. Okay, we are executing at this candle and at this candle. As soon as price is coming down, retesting this inversion fair value gap, we are executing here. After price closed the candle's body above the inversion, we are executing at this level. From the inversion, there is at manipulation lag or at the Judas lag. Okay folks, I hope it's clear. It's very simple. We have 3 rules to follow. Once we identify a fair value gap at the manipulation lag, we'll expect to see price coming back up. Okay, there are other rules. Price will have to do stop hunt. We already discussed about those things, so if you missed it or you join later, you can go back and watch it again. So once price does close this candle's body above, we'll look for speed. That if price closed the candle's body above here with speed, it did that. Then as soon as price generates the second candle, it comes down, retest the inversion here, we'll execute. Where will be our stop loss? After price closes the candle's body above inversion, we wait for price to retest the inversion at the next candle, and that's when the high probability signal comes. As soon as price is retesting this fair value gap, you are inversion, you are executing here the second candle. If price is giving you opportunity to retest and it comes back inside this inversion, you are executing again. We buy at the bearish candle when price is trading inside inversion and breaker. So here, as you can see, price didn't close the candle's body above the breaker, right? Sorry, price did close the candle body above the breaker, plus price is retracing lower. So once this candle was black, okay, when this candle was bearish, we buy. We are not buying in any bullish candle, folks. If you are buying here, your risk will be a lot more than what price can offer when it's trading inside this inversion. So once price is trading inside this inversion, we'll be looking for buy when this candle is black. When this candle opened here and came down, we'll be looking for to execute. So our stop loss management here, we'll see where we will put our stop loss. So this is the whole formation. As you can see, once price stepped inside the inversion, we saw speed, and that's what we expect to see from price. Where will be our stop loss? So here our stop loss will be a little bit different from what I already shared with you all. We will have our stop loss below the fair value gap, right next to the fair value gap. The next candle that price generates after generating the fair value gap, we will put our stop loss below this candle's low. These rules are very specific, folks. Don't put your stop loss here. Okay, you can do that if you are willing to risk more, but if price is going below the last candle before price formed before price formed a fair value gap, if price is going below this candle, then you are wrong anyway. You should close your trade, and that's the reason we'll be putting our stop loss at the next candle after price generates this fair value gap. Hamid, you are asking the questions that I already answered. How will you know that it's a breaker? For price to generate a breaker, it will have to follow some rules. What are the rules? Price will have to form the breaker inside a higher time frame PD area. So imagine there's a higher time frame PD area. Then price will have to have clean swing lows for bullish breaker. We have a clean swing low here. Then price will have to do a stop hunt. Price did a stop hunt. So when price did all these three things, we are expecting to see these up close candles becoming and performing as a breaker. Okay, and how will you know that this will actually work as a breaker? We have a fair value gap here, right? So price is going up. As soon as price closes the candle's body above the inversion, is activating the breaker as well. No need for price to go above the breaker and close the candle's body, because as soon as price does closes the candle's body above the inversion, is activating the breaker as well, plus the inversion as well. We don't want to see price going below the breaker, the inversion. Price can have its wick below the inversion, but the body should stay inside the inversion. Okay, Hamid, I hope it's clear. How do we know that this is a breaker? Because price did a stop hunt inside a higher time frame PD area, price has clean swing lows. Okay, and plus, if you are still confused, I told you guys that this type of execution is advanced level of execution. If you are very new, okay, if you are very new, I'll suggest you to stick with the first formation that I shared with you all, the actual breaker formation. Stick with that, and with time, trust me folks, you will see this type of setup repeating, but you will have to give yourself time to improve. You will not, trust me, you will not see it tomorrow forming in price. Okay, even if you see it, you won't be able to execute because you will hesitate. The hesitation will be there. You need to train your eye to see it. Okay, what I'm sharing you here, these are the same exact formation that price will have on chart. Okay, exactly the same. The only difference will be, like, suppose this candle will be a little bit bigger, or this candle will be a little bit bigger, or we'll have a bit higher wicks. That's the only difference. That same exact thing will price repeat. So our stop loss will be below the second candle after the fair value gap got generated. Later we will expect to see it turn into inversion. So I talked about how will you know that price is activating this inversion. Price will have to close the candle's body above. Go back to the previous slide and you will see me explaining the rules. Price will have to close the candle's body above this fair value gap with speed, with forming a PD area. Suppose a fair value gap is here, or without a fair value gap. If the fair value gap is not here, then we can expect to see price retesting the inversion. But if we have a fair value gap here, we will take in execution inside this fair value gap, and our stop loss will be below here even on that case. So these are the very exact things, folks, that repeats inside time. Okay, it repeats inside the specific time periods that I shared with you all. This setup, you will look for this setup to form when inside the manipulation macro, so you know the time when you will be looking for this type of setup forming, because price is doing what? It's changing a trend here, right? Price is going above a inversion. Suppose price is continuing a bearish market maker, price is having a market maker sell model here. So once price generates a formation like this with a fair value gap, you will expect to see price continue its trend higher and have a market structure shift. Once price closes a candle's body above the inversion alongside with the breaker, it's activating the breaker plus the inversion plus it's having the market structure shift. So it's doing a couple of things. That's the reason I'm marking these type of levels as advanced levels. I'm not guaranteeing you that tomorrow you will see the same pattern in your chart and you will be able to execute, but rather with time you will be able to see the same pattern repeating in your own chart. So let's move on to our next lecture. When price retests the inversion, okay, what we looked here before is that price is doing immediate rebalance. Okay, the retest was very small. In the next slide I'll show you guys when price is having like deeper retracement. Okay, just like I showed you guys in the previous slides, this here is a immediate rebalance because we are looking to buy as soon as this candle is going lower and hitting the inversion here. I'm explaining again and again, folks. I hope it's getting clear to you. When price is trading inside this inversion at this candle and this candle, we are expecting to buy. Okay, we are not looking for like a deeper retracement, like price is going up and then coming back up. No, we are not doing that. We will be looking for this scenario here. When price retests the inversion, this is the scenario that a price will be doing. Okay, so what's the scenario here? Before I talk about it, I'll pause the stream for 1 minute. I'll go and make a coffee, and before so when I'm making the coffee, look here and put your own logic that I shared here. There are specific logic why you will expect to see price retracing lower. Okay, do you guys see any difference here? So what's the difference here, folks? Did you guys identify it? This here price didn't came back inside the inversion, so we are only executing with our previous model that I shared with you all when price is retesting this inversion, right? But here, as you can see, price didn't retest this inversion, and rather it left this inversion unfilled. Alongside, it generated a new fair value gap here, which makes it a BPR, but we'll consider it as an inversion as we are looking at the topic of inversion and fair value gap. Okay, so we will expect to see price retracing deeper because of this. When price leaves this fair value gap unfilled, or sorry, this inversion unfilled, we expect to see price going higher, hitting a premium PDRA, then retracing lower. And once price retraces lower, that's the time when we will execute at this candle, and at this candle price will generate a fair value gap here, and the same pattern will repeat, folks. The same exact thing that I'm showing you here, same exactly it will repeat. Okay, so the logic behind we are expecting a deeper retracement now is because of the unfilled fair value gap here. Price left the inversion unfilled, and we need a balanced delivery here before pushing up. Okay, before expecting higher prices, we want to see price coming back down here. So anywhere here you are not buying, anywhere here you are not selling, you are waiting for price to come down, hit the fair value gaps, hit the inversion here, and then moving higher. When is this applicable? It's only applicable when price is leaving this inversion unfilled. If price is not leaving this inversion unfilled and price is coming lower, trading inside this inversion, we will look for the previous scenarios that I shared with you all. So as you can see here, price balanced the zone. Now we can expect higher prices with these two down close candles. Price did a deeper retracement, price stepped inside our inversion, right, and then price generated a fair value gap here. So here's another logic, folks, that I will share with you all. When price generates these two down close candle, and then if the next candle, you expect to see a fair value gap forming here. These are very specific rules. Okay, so write it down because I didn't write it here. When price hits the inversion, the last two down close candle, you want to see price forming a fair value gap right next to these two down close candle. Okay, so the rule is price will have to come down to hit the inversion. Once it does hit the inversion and shows willingness to go higher, what's the willingness? Okay, price is not closing its candle's body below the inversion. The wick can go lower, it does the damage, it does the manipulation, but the bodies are staying inside the inversion. That's what confirms us that price will go higher. And plus we will use these two down close candle here to predict a new PDRA forming. Okay, we will outline these two down close candle, and we will expect to see price forming a fair value gap here at the next candle. If price forms a fair value gap, you can expect to enter here again, pyramid on your entry. I hope it's clear. Is it clear? So manipulation before macro and entry inside macro, or both can happen inside. Manipulation, we are expecting to see it happening outside macro. Okay, and we are expecting to see low resistance liquidity run, price delivering with high volatility and speed inside macro. Inside macro, we do not expect to see manipulation. If price is doing manipulation, which I consider as high resistance liquidity run, I already showed you the example of high resistance liquidity run. If price is doing that, we are not taking any entries inside macro. Inside macro, price will do low resistance liquidity run, no manipulation, and that's what we expect to see. Okay, Jai, I hope it's clear. And these are very specific rules, folks. Okay, I'm only showing you one example. Why? Because this is the only example that price will repeat. With my 3 years of experience, I have hundreds of breaker execution recording. I already shared a couple of it with you all in the private Telegram group. And if you look carefully, I do the exact same thing. Price repeats the exact same pattern, each each buy candle. Okay, so the rule was, I shared another tip with you all. I'll be talking about this tip again. Once price hit the inversion, the last down close candle, you will mark it. You will expect to see price forming a fair value gap right next to the last down close candle once it going higher. How will you know the price will go higher? because price is not closing a candle's body below the inversion, okay, we can go lower, but the body should stay inside the inversion. If the body is staying inside the inversion, that's confirming you that price wanna go higher. After that, we want to see a fair value gap forming here, okay, at the very next candle, not like the third candle or fourth candle. We are not counting the candles here, but the rules are very specific. We are looking for a fair value gap to form inside here. I hope everything's clear here, folks. We'll be moving to our next slide very soon. Now we'll be looking at breaker plus order block. Here I'll share some topic that I know that you don't know about. So breaker and a order block, this formation is also a very high probability formation, okay. Before I shared with you a actual breaker, then a breaker with fair value gap. Fair value gap can form in premium, discount. Fair value gap can form like 2 times in the same price leg. Then the fair value gap can form also in the manipulation leg, and that's what we consider as an inversion. So we already talked about 3 types of high probability setup with breaker. Now we'll be talking about breaker and order block. Okay, so Brian Ho is saying there are some folks in the channel that paid but didn't receive the link. HYDRA, they've been DMing me for it. Okay, so some folks paid now, I believe. Yeah, because I was talking with you all here, so I didn't look at the chat emails, but hey, I'll be replying to the emails now. Okay, so 6 folks just like sent me the money to get enrolled in the course. I don't know like why they took so much time. So I replied to them, Brianna, then Jonathan, then Kayan, Ben. So all of you paid today, and just like before I started my stream, that's the reason I didn't see it. I'm sorry for that, but I shared the link of the stream with you all right now. And if you missed the stream, the first part of the stream, don't worry, everything will be recorded. This stream is getting recorded, okay? You can just go back and listen to it again in your free time. So let's start our lecture on order block. So we'll be looking for order block to form in the first leg of breaker, and that's high probability, okay? So the first leg of breaker, we'll be looking for the breaker forming there, okay? So the formation, the first formation will be something like this. We have a higher high here, and we are expecting to see a bearish breaker forming here. So before I talk about the order block here, do you guys see it here?
I'll just give you guys 1 minute, and in this time I'll reply for some folks who don't have the link for the session. I don't know how these people missed it. I replied like to every single one of the person who emailed me like the day before today and before that. Okay, so we have our breaker here. Let's continue, folks. So we have our breaker here, then price generated a swing high, another swing high, price went above this swing high. So this is what we are expecting to see working as a breaker. Where is the order block here? So before we identify a order block, the way price forms a order block inside a breaker, it's a little bit of advanced theory, okay? Most of the time you won't be able to see it because it has some specific rules. If you follow these rules and you are not looking at chart to identify a random breaker, if you are not doing that and following the rules, you'll be able to see the order block forming and you can execute according to that. And with this order block, okay, with this order block theory, we can take early entries inside breaker. Okay, before I was showing you guys like when price was near, when price had a near PTA with a breaker, right? But this time we will be looking to take early entries with breaker and order block. So we have a fair value gap here, right? Price formed a fair value gap, then price came back up with the up close candle here. So these up close candles, these two up close candles, we'll be considering these as our order block. Okay, the first or up close candle that hit the fair value gap is our order block. Is it different than the order block that you already know about? What you know about the order block is that price will have a last up close candle, and that's what we will be considering as an order block. But here what I'm sharing with you is that when price forms a fair value gap inside the breaker, okay, and price retraces higher, price generates a bullish candle, the last candle that hit the fair value gap, we will use this candle as our order block. Okay, once price generates this up close candle and goes below this candle, we will execute at this candle, price retesting this order block. As you can see here, at this candle we can execute at these candles and target this swing low, or if we have a lower target like suppose an unfilled fair value gap or a discount PDRA, we'll be looking for that. Okay, so these are the order blocks that we are looking for. So what are the rules? Price will have to do stop hunt, then once price is coming down, it will have to generate a fair value gap. Okay, and when price is retracing back to the fair value gap with a bullish candle, that bullish candle will become our order block. Right? Is it clear, folks? So high probability order block formed inside fair value gap. Okay, when price generates order block inside fair value gap like this, you can use a very narrow stop loss. So this opportunity, when it comes into the marketplace, it gives us also a chance to use a very, very narrow stop loss. And what will be our stop loss? Which can be above the swing high body. So this time we are not putting our stop loss above this swing high with the breaker or above the breaker, but we are putting our stop loss above this actual manipulation swing high, but in the body. Okay, we are not putting the stop loss above the candle's wick, but in the candle's body right here when we are executing with a breaker. The folks who have experience with a fair value gap, breaker, the folks who took entries with breaker, trust me, you already saw price forming a fair value gap inside the breaker, but you didn't know that the up close candle working here as an order block. Right now you do, and the folks who didn't know that before, now you can use this simple logic that price will do a stop hunt. Okay, price will generate a bearish breaker. You will have to predict that this breaker will activate it. Okay, this breaker will get activated. And how will you know that? Once you see price rejecting from the order block, you are not pushing the button as soon as price hitting the fair value gap. Are you pushing the button here? No, that's not in the rules. You wanna see as soon as price hits the fair value gap with a bullish candle, at the next candle you wanna see it opening lower, retesting this order block. Okay, and then going lower. If you are still confused, you can execute at the next candle. As you can see, the next candle opened where? Opened here, it went higher, retested this order block that formed inside the fair value gap and then went down. As soon as price hitting this fair value gap, we are not executing, rather we are waiting. Okay, we are waiting for price to generate couple more candles and retest this breaker. What do I mean by retest? Look at how these candles are behaving here. Right, this is something, folks, that you will not see in public place. Okay, every information that I'm gonna be sharing from now on is not available in public place. ICT, he don't talk about these things because these are the things that happens inside the chart, inside the chaos, and you think, okay, price is so choppy right now, should I trade right now? But here price is forming a high probability PDRA with logic. You just didn't know it before. So I'm gonna share the rules again. I didn't write it here, but write it from your part. Price will have to follow our 5 rules of forming a breaker. Once price does that, okay, once price does a stop hunt, we will expect to see price forming a fair value gap at this leg. Okay, not at the manipulation leg, because if price is forming the fair value gap at this leg, it will work as an inversion. Then we have different rules. But if price is forming fair value gap here inside the breaker, right, we have different rule. We will wait for price to come back up immediately. We are not expecting to see a long retracement. Okay, we are not expecting to see price leaving this fair value gap unfilled. If price is leaving this fair value gap unfilled, this fair value gap will work as the premium fair value gap that I showed you guys before. Do you guys remember? There was a chart that I showed you guys that there will be a fair value gap which will be working, which we will expect to see price leaving unfilled, and then price activating the breaker, coming back up, generating relative equal lows. Do you guys remember that? If not, just go back and listen to it. Here we are expecting to see price retesting the breaker immediately. Okay, as soon as price goes inside the breaker, the last up close candle is our high probability order block, folks. The same exact way price will form the setup. The only difference can be, suppose the next candle that you can see, it is lower in the actual chart. The next candle can be a little bit higher, but our logic stays the same here. We are using this candle that hit the fair value gap as an order block, and we are expecting to see price closing a candle's body below the order block. And as you can see, price did here at this candle and at this candle, and we can execute at this candle with a stop loss above here. Is it clear, folks? Now I will share with you all the second formation with this order block theory. There's another order block here. Do you guys see it? Before I outline the order block from here, I want you to identify or use your own eye to see it here. The last up close or down close candle at the manipulation leg is working as also a order block. Okay, the last up close or down close candle where at the manipulation leg. What manipulation leg? This leg right here. Where's our last up close candle? Because we are expecting a bearish breaker, right? So we are gonna be looking at the up close candle. If we are predicting a bullish breaker, then we will be looking at the last down close candle, which will be here. But this time we are predicting a bullish breaker, right? So this is our last up close candle. As you can see here, the same formation, the same chart, folks. Okay, so this time price can form a fair value gap here, or it can't. It doesn't matter. If price is forming a fair value gap here, then we are using this rule. But suppose that there's no fair value gap here. Just suppose that, just imagine that. Then we'll be using this up close candle as our order block. And as you can see, price formed a fair value gap here, which is also making this order block as a high probability PDR. So as soon as price doing this stop hunt, are we executing? No, we are waiting for price to go below this last up close candle. Okay, the rules are price will have to do the stop hunt, you already know it. Then price will have to go below the last up close candle. Once price does that, it's activating our order block here. Okay, if price is not closing its candle's body below, okay folks, this order block is not like activated, and you can execute, you can take the trade here at this candle as soon as price close the candle's body below the breaker. And if price is generating the fair value gap, okay, and you want to take a safe entry, then you can follow these rules here that I shared here. But if price has no fair value gap here, you will look at this last up close candle and you will use it as an order block. And this last okay, so I wrote it wrong here. It was supposed to be the last up close candle. Okay, so let me fix it. Oh, my computer is lagging because of the amount of slides. Okay, like we are only at the number 20 slides. There are more than 40 slides, so we only reached like the halfway of our lecture. There's a lot of things that left for you to know here. What the hell? Okay. So what we are expecting to see here, we are expecting to see price forming the last up close candle and getting rejected from it, right? Just give me a little bit of time. Okay, so this was our formation, and we are expecting to see our last up close candle in this bearish scenario working as a confirmation to us that price wanna go lower. Okay, so suppose you are not feeling ready to execute from this order block, you can use this order block for a confirmation. Okay, you don't have to take this early entry if you are not confident enough. Okay folks, you are not forcing a setup, you are not forcing a theory that you are not comfortable seeing, you are not used to seeing. Okay, that's how I will say it. So if you are not like, if it's the first time you are hearing about this order blocks theory, then I'll suggest you just to use these order blocks as a confirmation, and once price does close as a candles body below the breaker, you can execute. Okay, if you have the experience and you feel like, okay, I'm seeing the same formation that HYDRA shared, then you can only execute at that time if you have these type of formation exactly repeating in price. Okay, so if we are right anticipating that this breaker will show resistance for price towards downside, then this order block should be respected. So if we are expecting that this breaker will get respected in price later, we also want to see price respecting this order block to get resistance to our sell side liquidity. As I told you guys, if you are not comfortable using this order block as an entry, you can use it as a confirmation, which will boost your confidence in the trades. Okay, this theory is not for entry but to use it as a confirmation. As I'm telling you again, if you are not confident enough, take it as a confirmation, not as an entry. Okay, high probability setup here is this, folks. Once price generates a fair value gap inside the breaker, then that up close candle becomes our breaker, sorry, order block, high probability order block. This scenario is not a high probability scenario. I'm sharing why I'm sharing it to you here, because this thing also repeats, and you can use this last up close candle as a confirmation. Okay, sometimes if I'm sharing the execution here or on Telegram or Twitter, you guys will see me taking the execution early, and that's what I do. A tip: a high probability order block forms once price takes out a swing high or low with a fair value gap. Okay, so we already know about this. I hope everything is clear here. Do you guys have any question about what I shared just right here? Patrick, I already talked about it. The question that you were asking me: how will you know that price will respect, continue lower, and activate this breaker? So there are some rules. If price is forming this fair value gap, okay, and then price is going respecting this order block, you can expect to see that with a high probability, meaning like with 80% of chance the price will go lower. And there are other rules. Okay, I don't know why you guys are forgetting the rules. The 5 rules that I shared with you all, that makes our breaker high probability. We'll have to have a swing higher time frame PDRA from where price will reject or get support. Then we'll have to have clean swing highs. Then we'll have to have a stop hunt. Then we'll have to see price closing a candle body lower. And the last but not least, the most important thing is the target. If we have a high probability target, that means an unfilled fair value gap in the discount PDRA, as I'm showing you a bearish breaker example. So if there's an unfilled fair value gap, unfilled BPR, unfilled new week opening gap at the discount PDRA, that's when you will know that price will respect this order block. Okay, so everything goes back to the 5 rules. That's the reason I shared it shared it early. If you are getting confused, like how will I know that price will respect it? Price is trading inside a higher time frame PDR from where you are expecting to see price getting rejected, right? Then price formed a clean swing high, went above a clean swing high, did a stop hunt, that price formed a order block here, price is going below the order block. This is another confirmation. Then once price closes again this body below here, there's another confirmation. Then we have a target here. So couple of confluences, folks, couple of things that we are looking for. Not only that this pattern will show up in chart and we will execute. No, it's not like that. Price will have to have some rules, and that's what makes our setup high probability. Once the rules are visible, the things that we are looking for, we will know that this candle will hold price lower. And as I told you, that this candle can also work as a high probability for us to get confirmation, not as high probability. This candle can also confirm us this price wanna go lower. Okay, so suppose price closing a candle body above this last up close candle, then we will know that price will not respect this breaker. As I'm telling you, if you cannot identify a high probability target, okay, if you are new, if you are a beginner, just use this up close candle or anything here that I shared with you as a confirmation. And once price actually closes a candle body below here, you can execute at that time. So now I'll be doing a bonus topic. Okay, this is not a topic that I included in in our breaker when I was making this content, but I thought of making it because this will be very beneficial for us to use reclaimed breaker. Okay, when a breaker fails, we can use the same breaker to execute new trades, and this information right here will be very, very beneficial for us to take those entries. So here we'll be looking we'll be using old order block, which will be reclaimed order block, to predict new PD array. So near to old order blocks, we will expect to see a fair value gap forming, a volume imbalance forming, order block forming. Okay, near to the old order blocks. What is the market maker buy model? So for that, you will have to understand the market maker buy and the market maker sell model. Okay, in simple terms, I'm not gonna take you into details, but in simple terms, we can identify a market maker buy model as it's understanding market going lower for discount PD area to reach for premium PD area. So if I put it simply, price is going into the discount to reach for the premium PD area. So when price is going for the premium PD area, that's when price is forming a market maker buy model. What is the market maker sell model? It's understanding market going higher for a premium PD area to reach lower for a discount PD area. It's a very simple concept. I don't know why people make it so hard to understand. This is the market maker buy and sell model. When price goes up from by using a PD area, so suppose price is going lower by using a breaker, that's a market maker sell model. There's nothing else there that's happening. If price is buying, if you are buying from a bullish breaker, that's what market maker buy model is. Okay, you are using a discount PD area to target the higher PD area in a bullish breaker. You are using the premium PD area to target the discount PD area. Very simple things, folks. To predict new PD areas on market maker buy model, we will be using last down close candle prior to move up from the sell side of the curve. When I show you the formation, the pattern, it will make a little bit more sense, but for now, know that to predict a new PD area, we'll be using the last down close candle from the sell side of the curve before a move up. Okay, so how will it be? So now I'll show you guys the formation predicting new PD arrays on buy side of the curve by using old order blocks from the sell side of the curve. So here, so look at the last two rules that I shared for you. So to predict a new PD array on market maker buy model, we'll be using last down close candle prior to a move up from the sell side of the curve. To predict new PD arrays on market maker sell model, we'll be using last top close candle prior to a move down from the buy side of the curve. Okay, so we have a sell side of the curve here. Now we will use the old order blocks to predict a new PD area to form in the buy side of the curve. Okay, so what does our rules say? Last down close candle prior to the move up. So we have a move down, we'll be looking here because this is a move up, so we'll be looking at this down close candle. Then as you can see, price formed a breaker here. We have a higher high, new higher high, right? So this is our breaker. This is our last down close candle here and here prior to this move up. So we'll be looking for this candle here and then here. Then we have another move up prior to a move down, right? We'll be looking at this down close candle to predict a new PD area. Just like this, I hope it's clear, right? So we are pointing out the last down close candle from here. Why? Because after that price retraced a little bit higher, went into the premium zone and then retraced lower. Then here again price retraced higher. Then this last down close candle here and here, we'll be using it to predict our new PD area. Same goes for here, because we are using to predict a new PD area to form on the buy side of the curve. That's why we are using this kind of scenario from the sell side of the curve. So how will it look in the buy side of the curve? So we mark the last down candle prior to a move up. I hope it's clear. Now we would like to see price going with speed. Okay, when price, I'll show you guys an actual chart. Now here I'm showing you a pattern, so when I show you the example on the actual chart, it will make more sense. Just look at the pattern now, because it will help you to understand what happens in the actual chart. So when price is going above this candle here, okay, we want to see price going with speed. We don't want to see price retracing from this, because this is a mitigation block, folks. Okay, we don't have a stop hunt here. So when we don't have a stop hunt, the last down close candle here becomes our mitigation block. So price can easily come up here and then continue its trend. What are the rules? We want to see price moving with speed when it's going through the last down close candle prior to a move up from the sell side of the curve. Okay, then once price goes up, okay, closes the candle's body above the last down close candle, we expect to see price retracing lower. And before that, we want to see price forming a PD area, a bullish PD area right here. A bullish PD area can be a fair value gap, can be a breaker, can be an order block, everything. Okay, everything, every PD area that is bullish, we will expect to see it forming here. But the highest probability is price forming a fair value gap. Okay, so what are we doing here? We are expecting to see price going up, going above with speed, going above the last down close candle prior to a move up from the sell side of the curve with speed, and forming a new PD area, new bullish PD area right next to the old order blocks. Okay, once price does that, we'll expect to see price retracing lower inside this PD area, this bullish order block. Okay, and not going lower. We want to see price respecting the last down close candle from the sell side of the curve to push price higher. We want to see price using this PD area plus that PD area that price will form inside here, inside the buy side of the curve, the new PD area. We want to see price coming down, hitting this PD area and going up. Then here again we have our last down close candle prior to a move up. We mark it here. We expect to see price forming a PD area here. Okay, this PD area can be a fair value gap, a order block, I'm saying it to you again, a breaker. Highest probability is price forming a fair value gap inside these last down close candles. Then the same thing, we will expect to see price retracing lower. Okay, price can go up, get resistance from the last down close candle here, because this is now working as a mitigation block. Okay, as long as price is not closing a candle's body above the last down close candle prior to a move up from the sell side of the curve, we'll be using it as a mitigation block. Okay, and after that we will expect to see price going higher with speed, forming another PD area here. And that's how price completes a market maker buy model. Okay, price using the last down candle to form a new bullish PD area plus to use it as a support. Okay, so I'm gonna say it to you again, folks. Read the rules here. So when we are predicting a market maker buy model, we'll be using the last down close candle prior to a move up from the sell side of the curve to predict a new PD area forming. Okay, how does ICT knows that a fair value gap will form here? Just like this, uses the same information that I'm talking here, sharing with you here, and that's how he knows. That's how I know that a fair value gap will be forming here. That's how I expect to see a breaker forming here. Okay, and at these times, okay, when price is retracing lower, hitting the fair value gap, this is happening inside our macro. Every single time you see the price can form this fair value gap before macro, but we are hitting this fair value gap inside macro. This is a very specific thing, folks. Okay, price can also form this PD area inside the macro. Okay, and also can have hit the PD area inside the macro, continue the trade inside the macro. So everything that is happening here is inside the macro. I hope I don't have to say it separately, you already know it. So how will we see it in this when we are trying to predict a new PD area to form in the sell side of the curve? So now I'll show it to you all, predicting new PD areas on sell side of the curve by using order blocks from the buy side of the curve. So here we have a market maker buy model, which is a little bit critical than what I shared here. Okay, price will not go higher straight, it will have formation like this. So before I mark out the last stop close candle prior to a move down, I will give you some time to watch it here. Okay, so now let's mark out our last stop close candle prior to a move down. Okay, folks, so what do you guys see here? We have a swing high here, right, prior to a move down. So we'll be marking the last stop close candle from here. Then as you can see, price moved up. This is a move higher prior to a move down, so we'll be marking the last stop close candle from here. So I'm marking both together. Okay, then we have a swing high here prior to a move down. We are marking the last stop close candle here. Then we have another swing high here prior to a move down. We are marking the last stop close candle here. Now once price is going coming lower, we will expect to see price forming a PD array inside here, 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 and use all of these last up close candle to get resistance towards sell side liquidity. Okay, here we saw price forming the bullish price using the last down close candle as a support to form new PD arrays to go higher. Here in the sell side of the curve, we will expect to see price going lower below this last up close candle and forming a new PD array and using this PD array to get resistance towards sell side liquidity. Okay, and now we will expect to see, so I shared the rules with you all. What are the rules? We will expect to see price going through the last up close candle, okay, with speed. Okay, if price is not going with speed, this can work as a support for price to continue with trend. So I'm answering the question that you will ask me, like how will I know that price will go lower? That's how you will know price should go below this last up close candle prior to a move down from the buy side of the curve in the sell side of the curve with speed. Okay, I hope it's clear. Once price goes with speed, you will expect to see price forming a fair value gap here. Once price does forms a fair value gap, you will expect to see price retracing after hitting the last up close candle from here, because what is this? It's a mitigation block. That means what? It's a bullish PD array. It's not a bearish PD array yet. When does it become the bearish PD array? When price is closing a candle's body below the last up close candle prior to a move downwards in the sell side of the curve with speed. That's when price does a market structure shift, and I refer to it as a hidden market structure shift. So price now went below this last up close candle prior to this move down. We will expect to see price forming a new PD array here, and as you can see, price did form the PD array. Now we'll expect to see price coming up. Okay, the bodies should stay inside here, folks. Okay, this is very important rule. Price should not go above and close a candle's body above this last up close candle that you see here. Okay, every up close candle that you see, price should respect it and close a candle's body lower than this. If the wick can go up, but the body should stay inside here. So suppose price is going up and closing a candle's body above this fair value gap, then we will look inside this last up close candle prior to this move down. We don't want to see price going up and closing a candle's body above. If price is doing that, that means what? Price is reversing. You should close your trade when you are still in profit. Price using the last up close candle to form a new bearish PD array plus to use it as a resistance. Is it clear? The buy side, market maker buy model, and the market maker sell model, how to predict new PD array using old order blocks. Is it clear? Before I show you the actual chart, how it looks in the actual chart, let me know in the chat if you guys have any questions. Brianna, you are welcome. I think you missed the first part of our lecture, so I'll recommend you to go back and listen to those first, not to listen to this first, because what I'm presenting here is coming with logic. Okay, every slide that I'm sharing one by one has a logic behind it. Okay, so I hope it's clear. I tried to make it clear from my ability, from what I understood as much as possible. I repeated the same concept again and again. So now I'll take you guys through in the next slide, and I'll show you how it actually looks in the chart. So the formation in the chart. So we have a market maker sell model here. So before I outline the last down close candle prior to a move up, do it with your own eyes. Okay, why? Because this will help you to improve right here. Okay, so mark the last down close candle prior to a move up, and we'll use the last down close candle from the sell side of the curve to predict a new PD area in the buy side of the curve. So were you able to outline the last down close candle prior to a move up? We also have a breaker here. I don't know if you guys see it or not. So let's mark our last down close candle prior to a move up. Okay, so we have a move up here. I didn't mark the last down close candle right now, but did you see a fair value gap forming here? Do you see that? We have our last down close candle here prior to a move up, right? Then price did what? Price came back up with speed. It closed the candle's body above the last down close candle prior to this move up. Move up, yeah. And at the same time, it formed a fair value gap here. Just like I showed you guys in the pattern, it's doing the same thing here. And then price continued its trend higher. Then again here, price formed another fair value gap here. Why? Look at here. We have a last down close candle prior to a move up. So we'll be marking this last down close candle. We'll be outlining it into time. And as you can see, price formed another fair value gap here. And this fair value gap is very high probability. Why? Because we have a mitigation block here. Okay. So every fair value gap that you can see is formed inside the last down close candle prior to a move up from the sell side of the curve. This is very simple, folks. It may be sounding to you at first like very complex, but I'm trying to make it like as simple as possible because trading is simple, folks. Okay, I can make it complex. I can put a lot of different rules inside here, but it doesn't matter. What I'm showing you here is the highest probability, nothing else. You don't need to look at anything else. Okay, so we have our last down close candle prior to a move up. We mark the last down close candle to project and to predict price forming a new PD area. Last down close candle before a move up, we are marking it to predict a new PD area. Then we have our last down close candle here. We are marking it to predict a new PD area here as well. Is it clear? Let me know in the chat if it's clear or not. Or if you guys have any question, I'll share another example with this because this is a very important lecture, folks. This alone will put you outside of like you didn't know anything what price is doing before. Now you know what price is doing, at what time it's doing, at what time it's forming a breaker. Here I'm not showing a breaker formation. Just give me a second, I'm coming back. So I got a question. Do you suggest using with Heikanshi candles? Okay, so I don't know what you were talking about. How Heikanshi candles? I never heard of it. So we are marking this on lower time frame, i.e. 1 or 3 minute. This concept is not limited on time. Okay, you can use this same concept to predict new PD areas on higher time frame as well as lower time frame. This concept is not bound with time. The setup that I showed you guys before, that is bound with time. You will be looking for those breaker forming inside 1 or 3 minute. Okay, 1 to 3 minutes. But this It's not bound with time. If you are looking at the daily chart, you will be just like this. Okay, from the daily chart, this formation can be on daily chart, on lower time frame, on 4 hour, 1 hour, 15 minute, as many time frame is there. This is the formation that we will be looking at. So I'll be sharing the next example with you all. So here's a tip. When price is going through the last down close candle in the buy side of the curve, from the sell side of the curve, we expect to see speed, a new PD area forming, price using old order block as support. So I shared these tips with you all when I was introducing to you about this order block theory. Okay, reclaimed order block theory. And now you can see I wrote it down here for you to use it in later, if in case if you forget. Okay. So that the information that I shared with you all in the reclaimed order block, okay, this same logic we will use to predict a new breaker from a failed breaker. So if you didn't understood it clearly, I'll suggest you to listen to it again. And before I move and take you to you guys in the reclaimed order block, sorry, reclaimed breaker block, this have to be understood. Okay, so I hope it is understood. This formation is only for buying opportunity, or can we short from the down candle? Knowledge 22. What are you doing? Like, I already talked about like how to buy and sell at the same time, right? I did share that. So where did I talk about it? At this slide. Look at that. I shared with you a buy formation plus a sell formation. We'll be using the last up candle prior to a move down to predict new PD areas on the sell side of the curve. Then we'll be use the last down candle prior to a move up to predict a new PD area on the buy side of the curve. So now we'll be looking at another formation of breaker, which is coming with a volume imbalance, breaker plus volume imbalance. This is also considered to be as a high probability setup. So a volume imbalance gets generated when price is moving aggressively towards one direction and creates a high probability opportunity for us to buy or sell. Okay, a volume imbalance only gets generated when price is moving with volatility. In high resistance liquidity run, the volume imbalance that gets generated is not a high probability volume imbalance. We'll be focusing inside the third leg of breaker for price to generate a volume imbalance. So the formation is like this. We have a higher high. We are applying the rules that I shared with you all, the 5 rules first, and then we are looking for a setup. Okay, without those rules, no setup is high probability, folks. Price will have to do this formation inside a higher time frame PD area, okay, or a lower time frame PD area, premium or discount PD area, and that PD area will have to be unfilled. I shared it at the very beginning of our lecture, so you can go back and listen to it again. So we have a higher high here, we have a new higher high, then we are predicting a bearish breaker to form, and price formed a volume imbalance here at the discount leg, okay, at the discount range of the price. So we have this little separation. Look at the candles before it. Each of the candles are opening near to the candle before it, right? But this candle opened lower than this candle, and that makes it as a volume imbalance. So when price does things like this small separation between price is called volume imbalance with wicks. When price don't have wicks like this, we refer to it as a liquidity void, which is more high probability than a volume imbalance. So I will also share the example of that in coming lectures. A high probability volume imbalance forms inside the breaker in a discount range, okay? So I'm sharing very specific rules with you all, folks. This volume balance that is forming here, you will expect to see it forming at the discount lag, not here at the premium. If it's forming as a premium lag, we are not considering it as a high probability. I'm not sharing with you like the every possible formation that price can have, but I'm sharing with you the high probability formation that price will have. Okay, so we have our fair value gap, we have our volume imbalance that formed in the discount range with this breaker. After that, we will outline the breaker and we will expect to see price hitting this volume imbalance and then going lower. Price can go up, but the bodies of the candle should stay inside the breaker. So where will be our entry? Our entry will be here, and our stop loss will be above the candle's body right here. This is a very simple concept, very easy to understand. Nothing is here is complex if you understood the previous lectures. Candle's body should be staying inside the volume imbalance. Wicks are allowed to move a little bit higher. Okay, wicks should not go below, should not go above this candle high, our breaker's high. Breaker's body should not go above the breaker body, rather it is allowed to go above and fill the fair value gap here that we have here. Okay, in this scenario, your stop loss will be above the breaker body right here. So this is the only formation with volume imbalance that is high probability. If a volume imbalance is forming in the premium lag, premium side of the breaker, then it's on you to take it. But if it's forming, I'm not considering it to take it as an entry, as I'm considering it as a low probability. Now I will show you guys how a breaker looks when it's coming with a liquidity void. The same logic, but this time we won't have the wicks. Okay, in a volume imbalance we have wicks crossing each other, but we have a little bit of separation, right, just like here. But in a liquidity void we don't have a separation but a gap. A liquidity void is when price has to trade inside a zone, even though, okay, wait, I did a mistake here. Now it's good. So a liquidity void, let me take it back again, let me take you guys there. So a liquidity void is when price has no trading inside a zone, even no wicks. Okay, liquidity void works as a strong support for a bullish breaker, resistance for a bearish breaker for price, and can be used many times in future as a reclaimed void. So reclaimed volume, a volume imbalance cannot be reclaimed. It's not a high probability, but a liquidity void can be used many times in future. Okay, folks, so how is the formation? As you can see, it's just as like our volume imbalance. We are expecting to see price forming a liquidity void at the discount range of our price leg, of this third price leg. Okay, so as you can see, this this liquidity void has no wicks but a big gap. It has no trading inside it. So this here is way more high probable than a volume imbalance. Okay, why? Because price has no trading inside this range. So price will eventually come back up, hit this fair value gap, hit this liquidity void and go down. Your stop loss is same as before, staying here. Okay, so there's nothing more to say here. This is our liquidity void, and that's a very simple concept. Here again, I'll share the logic that I will share the same logic that I talked on the order blocks. Okay, this candle, this bullish candle, is our last bullish candle that hit this liquidity void, okay, at the discount lag. So we can also use this, the up close candle, as an order block. So suppose you missed your entry here, once price closed the candle's body below this order block, you can expect to see at the third candle price rejecting by using this order block. So suppose you missed your entry from this liquidity void, You will wait for price to go below this order block, and at the next candle when price is retesting coming back up inside this order block, you can execute here with a stop loss above the breaker here. So is it clear, folks, with the what I shared at the next the slides here? If it's not clear, you can ask me questions in the chat. So now we'll be looking at breaker plus BPR. Okay, so MCO asked a very nice question. In the market maker model, in the last bullish or bearish candle, we take the whole candle or just the body. We take the whole candle with the wick, and we expect to see a fair value gap or a bullish or bearish PDA forming there. Okay, so now I'll be talking about the breaker plus BPR. This is our last formation. This is our last high probability formation, folks. A balanced price range. Okay, when price has two fair value gaps inside breaker alongside each other, that's when it becomes a high probability setup. A BPR is when price has two fair value gaps alongside each other. It's one of the highest probability formation with breaker. We'll be focusing on a BPR to form in the premium zone of second and third leg of breaker. I know that you guys have confusion about the second, first and the third leg. This lecture is coming inside the Reaper breaker, so when I'm talking about the Reaper breaker, this will get way more clear. Okay, folks, so just hold on and being a little bit patient. I'll talk a lot more about this in our coming topics. A BPR can also form in the discount range of a breaker, but this formation is less common in price. So before I showed you guys the inversion forming in the discount leg of the breaker, a fair value gap forming in the discount leg of breaker, and that's what making a breaker high probability. But here we want to see a BPR forming in the premium leg of the breaker, okay, not in the discount leg. If a BPR is forming in the discount leg, this will be considering as a low probability, which is less common in chart. Very less of the time, suppose 10%, 10 to 15% of the time, you will see price forming a BPR in the discount range of the leg. Okay, you will see most of the time price forming a BPR in the premium side. So how is the formation? This is the formation, very simple, easy to understand. We have a higher high, new higher high. We are predicting to see a bearish breaker forming and plus a BPR here. So this is just the pattern. I'll take you guys in the actual chart. I'll show you example, and that's the time when you will have, when it will make a lot more sense to you. So we have a fair value gap here at the manipulation leg. Okay, this is the rule. Then the new fair value gap will have to be right next to the old fair value gap that was in the manipulation leg. Okay, so we are expecting to see a fair value gap forming at the manipulation leg near to the swing high, this swing high. Okay, and then the new fair value gap forming right next to the old fair value gap. And this here we will consider it as a BPR. So this, I showed you the BPR that was in the premium leg. Now I'll show you BPR in the discount leg. And this is the formation, which is very less common in price. you will see less times, but most of the time you will see this formation forming. So we have a fair value gap in the manipulation lag in the discount range. Okay, from this low to this high, this fair value gap is coming at the discount. Then from this high to this low, we have this fair value gap coming into the discount. Okay, so both of these fair value gap are staying in the discount. A BPR is only gets generated when prices two fair value gaps right next to each other. Okay, that's when we consider it as a BPR. So now let's look at the actual formation in chart. BPR in premium lag. Okay, I'm showing you guys the BPR that is in the premium lag, right? So we have a stop hunt, higher high, new higher high, price generated a fair value gap where in the manipulation lag. That's where we want to see price forming a fair value gap. Then price formed another fair value gap where in the new lag after the stop hunt, right next to the old fair value gap. Okay, now what will we expect to see? This is our BPR. We'll be outlining the fair value gap that is on the manipulation lag. We will expect to see price hitting the fair value gap from the manipulation lag. Okay, that's the reason I'm only marking the fair value gap from the manipulation lag, not this fair value gap. We will not mark this fair value gap. Price can hit this fair value gap, but this is not enough for us to expect a high probability scenario. Once price comes back up, hit this fair value gap inside the manipulation lag, that's when it will become a high probability scenario. And at next, we are also expecting to see immediate rebalance. Okay, we want to see price not going lower, closing a candle's body below, but retracing at the same time, hitting this BPR and then going down. So the same logic we can apply here from the order block. Do you guys remember I told you guys that as soon as price generates a fair value gap after doing a stop hunt and price makes a bullish candle, we will use this bullish candle as the order block and we will use it to predict resistance in the coming price action. And as you can see, price went up. The bodies of the candles should remain inside the BPR. They should not go above the BPR. Okay, candles body should remain below the BPR, as I told you guys here. If you missed your entry here, you can use this last up close candle that hit the BPR, the first up close candle that hit the BPR as an order block to execute at this candle. At this candle you can pyramid here, okay, by using the rules here. A high probability scenario is created when price is getting resistance / support from the BPR immediately. What do I mean by immediately? What do you guys see here? Price generated a fair value gap, a BPR, and then is coming back up immediately. So when price does that, this is our high probability scenario. Long retracement leads to low probability scenario. What do I mean by long retracement? So suppose price left this fair value gap unfilled, this BPR unfilled, and then is going lower, having this type of formation, coming back up, getting resistance from our down close candle here. This will make this scenario a low probability. We want to see price immediately rebalancing the area here, providing liquidity inside here, and then going down. Does it make sense, folks? Knowledge 22, yes, we don't have to wait for a break of structure like before. When I was showing you the actual breaker pattern, I told you guys to wait for price to close a candle's body below the breaker, and then we were looking for it execution, right? But this time we will not wait for price to close a candle's body below. If price is doing this scenario, we'll execute at this candle. If we are missing our entry here, we'll execute at this and this candle. This is the high probability scenario. Plus price will have to have an unfilled fair value gap, unfilled new week opening gap, or like suppose a BPR that will have to be unfilled in the discount range. Why in the discount range? Because we are expecting lower prices. If those 5 rules are meeting and then price is presenting this scenario, you do not hesitate to execute, and you do not need a market structure shift here. Once price closed a candlestick body below this fair value gap here, once this fair value gap failed, as I told you guys in the inversion lecture, breaker plus inversion, I told there that when price is closing a candlestick body below this fair value gap from the manipulation lag, price is having a market structure shift. That means what? Price is changing its trend, and once price comes back up inside this BPR, we are executing here with a stop loss above here. We are slowly approaching towards more advanced lecture, folks. Okay, so if this don't make sense to you, please let me know, because when we are approaching towards advanced lecture, you won't understand anything, okay, if you're not getting your things clear here. So I'm giving you guys a little bit more time. If this thing is clear, let me know, and I'm gonna take you guys in the next lecture. So far, are you guys enjoying what I'm presenting in front of you? Making this template, folks, it took a lot of time from my part. I really put in the work to make things easier for you guys to understand, right? I'm only talking about the straight stuff. So if you guys are enjoying it, please hit the thumbs up button, and that will inspire me, that will motivate me to give you more clarification here. Okay, if you guys are enjoying my template so far, I hope you are enjoying, you are learning and finding it informative so far. Okay, folks, and yeah, that's the only thing that I'm expecting from you, a thumbs up. So now we'll be looking at the BPR that can form a discount. Okay, before at our last slide, I showed you guys that the BPR that is forming at the premium leg, at that is our high probability scenario. When price is forming a BPR at the discount leg, this is not a high probability scenario, but it forms. Okay, it forms often, and we'll be looking at this. So we have our BPR at the discount leg right here. Okay, according to the dealing range from this low to this high, this fair value gap is coming here. What is our rule? For a new BPR to form, price will have to close a candle's body below the old fair value gap from the manipulation lag. When price does that, okay, it becomes our what? BPR, a balanced price range. So we'll expect to see when price has a fair value gap, a BPR, a discount lag, we'll expect to see price activating the breaker first and then coming back up, hitting this fair value gap, hitting this BPR. We are not expecting to see an immediate rebalance here. Okay, immediate rebalance is what? Price coming back up before activating a breaker and hitting this BPR. Okay, that's what we refer to as a immediate rebalance. But here, as you can see, price retraced lower, closed the candle's body below the breaker. That means what? Price activated this breaker, then came back up inside this BPR. We only expect to see this long retracement when this BPR is a discount. Is the rule here clear? When price has a BPR at the discount of the breaker, we will expect to see price leaving the BPR unfilled first, activating the breaker, and then retracing back to the breaker, plus using it to get resistance / support towards our draw on liquidity. What is our draw on liquidity? At the very beginning, I shared the targets, 3 or 4 targets. Yeah, so these will be working as our DOL, a relative equal low, a swing high or swing low, a unfilled fair value gap, a unfilled BPR, a unfilled new week opening gap or new day opening gap. This will be working as our DOL every single time price forms a breaker. One of those targets will be there in front of you. When price has a BPR at the premium of the breaker, we'll expect to see price filling or tapping into the BPR immediately before price activates the breaker. So here we have the BPR at discount lag, so we are expecting less. So we are expecting more retracement to our downside, then price should come back up, and this is our high probability scenario. When we have a BPR at the premium lag, we do not expect to see price activating the breaker first, rather doing a immediate rebalance and then going lower. I hope everything is clear. Now I will take you guys how to take early entries using the first, second, and third leg, which of the breaker, which I refer to as Reaper. Okay, so this is a very advanced theory. I hope you guys understood what I shared before in the previous slides, because you will need it to understand the concept that I'll share here and in the next slide, which will be the reclaimed breaker. Okay, FW is asking, absolutely appreciate all you do, bro. Thank you. Out of curiosity, how old are you? I'm 22. My birthday is coming in the 4th December. So I started trading when I was like 18 years old. And from that moment, I was continuing with ICT. At 2019, I found ICT. And when I was 19 years old, and since then, I'm continuing with ICT. You are doing an amazing job explaining things. Your graphics are very clear. Thank you, Brianna. I thank you for like finding it informative. Freestyle, about time. All the entry models must be appear in the macro zone, or else. Could you explain again? Yes, every single entry, every single time price is retesting a BPR, a inversion, a fair value gap, those retests are happening inside macros. Okay, so I'll take you guys back inside this chart here. So when price is coming near to this BPR, price should be inside in a inside in a trend continuation macro, because the setup will appear before the macro. Okay, the setup can also appear inside the macro, but most of the time you will see that the setup forming outside macro, but the execution price activating the setup inside macro. So this tap here is forming inside our macro time period that I shared with you all. There was manipulation macro, there was trend continuation macro. So we'll look for setups to form inside those time periods according with our logic. Yes, Rio, we are only expecting to see this setup forming inside macro. Outside of macro, if this setup is forming, we are not taking it as an entry. Rio is also asking, do you have a plus to the macro window, or is it strict? I already talked about it. I think you missed it. So I'll suggest you to go back and listen to the macros that I shared. As a high probability, there was low probability macros too. There was macros like that I use personally. So everything was there and everything is answered. The question that you were asking now, Rio. How much are you in funding? I'm not a fund. I'm not relying on a funded account to make my ends meet. I've always been trading with my own personal funds. I've grown up in Canada, so I had a opportunity to save money, and I saved a lot of money. I was working part-time jobs since I was like 16 years old. So since then I was like saving money, and somehow it all connected with my trading, and those savings actually helped me a lot when I started my trading journey. Are you his chartered student? I'm not his chartered student, but when he was doing his mentorship, I was basically like getting all the information from the third party, but I'm not his chartered student. Thank you for the amazing comments, folks. So now I will talk about entries inside Reaper advanced theory. This is the highest advanced level of a breaker theory that you guys will find anywhere. Okay, so this strategy I used to take entries before breaker gets activated, and I call it entries inside Reaper. Okay, to take entries inside breaker, you have to have a good understanding of higher time frame support and resistance levels, means high probability PD arrays. I'll share about high probability PD arrays in our coming topics, but for now, know that if you cannot identify the high probability PD array from the higher time frame from where price will get reject or support, your breaker won't work. So first thing, as I shared as the first rule, is that you will have to identify higher time frame support or resistance level. We can look for two types of entries from a Reaper: inversion and reclaimed order block. I'll focus in the inversion. So how is the formation? Now let's talk about this, folks. I know the Reaper sounds a little bit like new to you, but once I present the formation, it will make a lot more sense. So what do you see here? We have a higher time frame PD array here. This is our first rule. Price will have to form a breaker inside a higher time frame PD array. So we have a higher high, lower low, new higher high. So price did a stop hunt here. We are expecting to see price forming a bearish breaker here. So price went below, closed the candle's body below. Our breaker is now activated. So this lag is what is Reaper. Okay, I'll teach you guys how to take entries inside breaker using this Reaper lag. Okay, once price is trading inside here, you will be able to take entries by getting confirmation from this lag. We will look for entries once price is going through the Reaper. So once price is coming down, okay, we'll be using logic from Reaper, from this lag of the breaker, to predict new PD arrays. We will use old PD arrays from Reaper to take new entries. The PD arrays that will form here, we'll use that to take new entries. I'll show you guys in the coming slides. We can also predict a new PD array to form with Reaper in the third leg of breaker. This is our third leg of breaker. This is first leg, this is second, and this is the third leg. So I marked it for you all here. The Reaper is the first leg of our breaker. The second leg is the manipulation leg. I already showed you guys how to take entries using the manipulation leg. Do you guys remember that there was a inversion formed here? There was another inversion that formed here. There was a BPR at the manipulation leg. So I already shared how to take early entries using the manipulation leg. Now I'll be sharing how to take early entries using the Reaper, the first leg of the breaker, and this is our third leg of the breaker. So what we'll be doing here using Reaper is that the PD array that forms here, okay, we'll be using that to take entries in the third leg of the breaker. So how is the formation gonna be? I'm giving you some time to look at here and identify a PD array that formed here inside the Reaper. Do you guys see a PD array here? So I'm using Forex Factory as my breaker, sorry, as my broker. You have your personal account. Yes, I've always been managing my personal account. How often do you use a Reaper? Very often. If I'm taking an early entry, okay, if you guys go back the day before today, I shared an entry on Telegram and I explained it, and that entry was using the Reaper. Okay, so if you guys go back and look at the execution there, I explained it, but I didn't explain about the Reaper, which I'll do here now. That execution was using the Reaper, so you can go back and watch the recording from my public Telegram group. What broker do you use to trade indices, forex.com, ovanda.com. These are the best regulated brokers with low spreads that you will find out there. Why I use forex.com? Because that's a broker that sends your money directly to your bank account with minutes. So suppose if I'm withdrawing like 5 to 10k, I'm only waiting like 10 minutes, and in 10 minutes that balance is account, so that money is in my card. But opening an account with forex.com is very hard, because you will have to submit your actual legal information, like your date of so your ID cards, your passport and stuff like that, your tax information. So yeah, if everything is clear, they will open a bank account, they will open a trading account which will be connected with your bank account. So let's come back to our Reaper explanation. We have a fair value gap here, okay, which is an inversion fair value gap. Now we will use this inversion fair value gap to take entries in the third leg of our breaker. Okay, this is our first leg of the breaker, and this is our Reaper. Okay, we have a stop hunt. Before we actually identify our how we will take our execution using this inversion, we will have to identify a breaker here. So we have a stop hunt here, price formed a new higher high here, so this down close candle we are predicting to use as a breaker. So this is our inversion fair value gap. This inversion here, folks, is one of the most powerful PDRA to take early entries with breaker. Okay, so this is very powerful, folks. If you see it, and if price is respecting the logic that I'm going to share with you here, don't hesitate to push the button here. Okay, we will wait for price to go below the inversion and close a candle's body. For bullish breaker, a close of a candle's body above the inversion. This inversion is in a bearish breaker, so we'll wait for price to close a candle's body below the inversion before we execute in the marketplace. I still have a lot of things to share, so don't thank me yet. Okay, so I still have some other topics left to share. Our stream is already 3 hours, so it's going beyond what I expected to like see. I thought like it will be max 1 or 2 hours and then I'll complete, but see, it's going well over like 3 hours. Anyway, I'm not tired, and I hope you guys are not tired and enjoying my explanation. What we will wait to see in price here, doing the same exact logic that I shared with you all before, but this time we'll wait for price to close the candle's body below the inversion, and I'll show you guys how it happens. Once price does that, we will know the change in trend happen and we can look for lower prices. So once price goes below the inversion, okay, we are not executing here, not here. This here is a turtle soup entry, and I'll teach you guys how to take entries like this in our turtle soup lecture, not here. Here I'm specifically focusing on breaker, how to take entries with Reaper. Okay, this is what gives us a chance to take early entry before price activates a breaker. So the formation in the first leg, entries and stop loss, I'll share all that stuff here. So this is our first scenario. We have our Reaper here, right? We have our breakers here. When we are using it as to take new entries, we will call it a Reaper, not a breaker. This is our first leg of our breaker. This is our second leg of breaker. This is our third leg of breaker. So using a Reaper, we are expecting to take entries in the third leg of the breaker. And as you can see, price came down, closed the candle's body below the inversion from the Reaper, and that's when the market structure shift happened. As soon as these candles open, folks, and goes up, you are executing here at this level. At this week, you are executing. Price is going up. Price opened here. Okay, now price is going up. When this candle is bullish, you are executing here without any kind of hesitation. As soon as price hits the inversion that is inside the Reaper, we expect to see immediate rejection towards DOL. You expect speed. So when this candle is going below the inversion, you wanna see speed, okay? Because this is still a bullish PDRA. Price can use this PDRA to continue its trend towards buy side liquidity. That's the reason I'm telling you guys not to execute here, not to execute here, not to execute here, but here. Why here? Because this execution is our high probability. Why? Because once price closes a candle body below a old inversion, we know that the market structure shift happened. Now we can take entries using this inversion. And as soon as price closes the candle body below, we'll wait for price to generate next candle, and this candle should go up, and we will be executing here. Entry inside Reaper inversion. So as soon as price hits the inversion again, you will be executing it this week. Okay, stop loss above the swing high. So here our rules has changed because we are using this Reaper to take a new entry. That's the reason we'll put our stop loss above this candle's body, above the swing high, but above the candle's body right here. Okay, so even if price is coming back up after closing a candle's body below it, this order block should shows rejection in price. Okay, the price should not go above this order block. That's the reason you can put your stop loss either above this order block or above the swing high. I consider this swing high is as a little bit of safer because price can easily come up, the wick can do the damage, price can go up, hit the rejection blocks here and then come down. So if we are putting our stop loss here, this we can consider as a high probability scenario. So this is our scenario 2, which is high probable than this one. Okay, this here we are looking at an immediate rebalance, but this here, folks, what's the difference here? What's the difference compared to this price action here in this lag? This time here price didn't do a, no, this is not a breakaway gap. Okay, so this time price didn't do a immediate rebalance here, rather it generated a new fair value gap. Okay, that's what making it as a high probability scenario. We have a this is not a BPR. Why it's not a BPR? Because we don't have a fair value gap at the manipulation lag, rather we have a fair value gap at the first lag, sorry, at the third lag, and the inversion that we are using is from the Reaper. So how will we take the early entry here? I know you already know the answer. We will be focusing inside this fair value gap. Okay, this is our high probability PDRA. Once price goes through the Reaper inversion and generates a new fair value gap alongside, we consider it as a high probability setup. So this here is also a high probability setup, but this outstands this scenario. Okay, either of this scenario will repeat, folks. I'm sharing different types of scenarios that will repeat. This will not repeat at the same time. This can repeat, these two scenario can repeat at the same day, but not at the same macro. Either this scenario is coming or at this scenario is coming. Either of these you are executing. Okay, but this is the highest probability scenario compared to this one because we have a new fair value gap right next to the old inversion. So now what we will be expecting to see, the same thing. We'll wait for price to close a candle's body below. We'll wait for this candle to go above and do a immediate rebalance. If price is doing that, we'll follow the rules from here, we will execute here. But if price is not following this scenario and leaving this area unfilled or untapped, okay, there's no price action here, no price didn't retrace here, we'll expect to see price retracing, doing a immediate rebalance right here, okay, before activating a breaker. Price can also activate a breaker and come back up, hit the inversion and then go down, but this is the high probability scenario using the first leg of breaker and taking entries in the third leg of the breaker. So is this slide clear, folks? Let me know in the chat before I take you guys into the next slide. Let me know if it's clear. Thank you for letting me know. Now I'll be moving to our next scenario with the Reaper. Here I'll teach you guys how to take entries using the second leg of the breaker by getting confirmation from the Reaper. How to take early entries inside second leg of breaker with the Reaper. Okay, our main confluence that we'll be using is the Reaper, but we'll be taking entries, we'll be taking entries inside the second leg. I'll show you to you here. We'll be focusing inside the Reaper for a new PD array to form in the second leg of breaker. Okay, now in the third leg there's no PD array forming. We have a PD array forming, that is PD array forming in the Reaper, then in the second leg, which is the manipulation leg. So what do you guys see here? This is our first formation to take entry using the Reaper. This is same as the inversion model that I showed you guys, breaker plus inversion. Do you guys remember? I showed you guys that inversion is coming at the premium side of the breaker, right? But this time we'll be using the confirmation using Reaper. There I didn't show you guys the Reaper, but this time I'll be showing you guys the Reaper and how to take entries with the confirmation with Reaper from this inversion. So we'll be marking out our Reaper. Okay, as soon as price hits inside the Reaper, comes inside the Reaper, we'll be looking for entries. So we have a fair value gap here that we want to see failing. We identified a potential breaker, right? We have a higher high, new higher high that is forming inside a higher time frame PD array. Then we have our down close candles. Price has both swing highs very clean, so we are expecting to see these down close candle working as a breaker. A new PD array fair value gap formed inside the second leg of breaker, which is here. Now we will wait for price to go below this fair value gap with speed and close a candles body below this will confirm our market structure shift. So in our last slide I showed you guys the PD array that formed here. Then at the third leg, this time we are looking at the PD array that formed here, but we are also using the confirmation from the Reaper. What is the confirmation? Okay, price formed the fair value gap inside the Reaper. So what kind of price action we'll be looking at? The same as the inversion that I showed you guys with the breaker plus inversion. We have our Reaper here. Okay, just give me a second because I marked the Reaper wrong. These down close candles are our Reaper. Entry will be inside the fair value gap that turned into inversion. So as soon as price closes the candles body below this inversion fair value gap, we will use the same logic that I taught you guys before. Price coming back up, hitting this fair value gap, and then going down. In the premium so here as you can see we have our inversion. We are looking inside this fair value gap. Okay, folks, this Reaper. We are looking for a new PD array to form at the second leg according inside the Reaper here. So our new PD array formed a fair value gap. Now we wait to see this fair value gap getting filled. This fair value gap that you are seeing in the new price leg, it can be here or it cannot. This doesn't matter. Okay, I'm sharing this fair value gap with you all because this is also possible for price to form. But if this fair value gap is not here, it doesn't matter. We have a fair value gap here which is inside the Reaper. So we'll be taking our entries here, and our stop loss will be above the swing high candle's body. This is the swing high. We'll be putting our stop loss above the candle's body right here, and we'll be targeting, if we are taking early entries using this Reaper plus this inversion, we'll be taking targeting this sell side liquidity. What is this? This is our low hanging fruit. From this low, sorry, from here to here, price will give you 2R if you're putting your stop loss here. Okay, that's a very nice trade. And the same way, folks, I'm telling you guys again and again, price will not form anything outside what I'm showing you here. 7 setups that I showed you guys, plus the Reaper, plus the reclaimed breaker block that I will be showing you. These are the only things that price does when it's forming a breaker. Hulk, I already talked about how to validate a stop hunt. Okay, just go back when I started my stream and you'll hear me saying that how we can validate a stop hunt. Okay, there are a couple of rules. Price will have to have a clean swing high visible. Without a clean swing high, a stop hunt is not valid. So now let's move on to our next topic, how to take early entries inside third leg of breaker with the Reaper. So far I showed you guys how to take entries using the first leg of the breaker, then the second leg, which is the manipulation leg. Now I'll be showing you guys how to take entries using the Reaper, the third leg of the breaker. If there's no potential high probability PDA on first and second leg of the breaker, we'll shift our focus on the third leg and look for early entries there. In this case, to take early entry, we will need a strong target, relative equal high or low below bearish breaker or above bullish breaker. So without a high probability target, we will not take this specific entry. This specific entry is an advanced entry and it requires a high probability target. If there's no high probability target for price to go to or provide liquidity, these setups will not work, folks. Okay, so be careful in that regard. So let's identify our breaker here. We have a clean swing high here. Price cleared the swing high, went above and did a stop hunt. We are expecting to see a bearish breaker forming. Okay, plus do you guys see a difference here? We have a relative equal low down here, right? So this is included in the rules. So look at here. In this case, to take the early entry, we will need a strong target, relative equal high or low below bearish breaker and above bullish breaker. Okay, so we have a bearish breaker. Now we are expecting to see price having a relative equal low just like this. This relative equal low can be here or can be in an old price leg. Okay, it's not like a must rule that price will have to form a relative equal low down here. Price can form a relative equal low in an old price leg, but it will have to be lower, okay, than our breaker. So we have our Reaper here, and we have a PD area that formed inside the Reaper. If we mark the Reaper and outlined it, extend it out on time, you will see that this fair value gap is forming inside the Reaper here. Early entry with this strategy, I'm warning again, is only allowed when price has a near term relative equal high or low. So relative equal low, what do I mean by near term? Like this, okay folks, price will have to generate or leave a relative equal low very near to price when it's when you are taking early entries with a Reaper. So the next formation is like this, same logic folks, the same logic again and again. only different is the formation is different. Okay, in our earlier slides I already showed you guys how to take entries inside this price lag. Okay, here as you can see we have a fair value gap here that formed inside this reaper, so we'll be extending the reaper here, and any PD array that forms inside our reaper, we can use it to take early entries. I'm showing you guys a fair value gap here, but price can also form a volume imbalance. I showed you guys examples with that. Price can also form an order block here. I also showed you guys examples with that. So whatever I'm showing you guys, that's it. That's the only breaker that price will form. Okay folks, other than what I'm showing here, there's no other breaker. Trust me, there's no other formation that price can have. This is the only formations that price will have. So everything that price can do with a breaker, I'm showing you here. And as you can see, suppose you are not comfortable taking entries here, okay, you can wait for price to activate the breaker, and if we still have lower strong target like the unfilled fair value gap, unfilled BPR, relative equal lows, then we can still execute here. As you can see, price did close the candle body below, generated a fair value gap here, right? Fair value gap at discount is very powerful, right? I already talked about this. You can take another entry here. So I'll share another high probability scenario with Reaper here, and this is the high probability scenario with Reaper. What's the difference here according to these scenarios? Sorry, compared to these scenarios, not according. What's the difference here? Do you guys see it? I already marked it so you can see it, but before I explain it, just try to talk with yourself with your own logic what I'm gonna say. So this time we have a breaker inside the Reaper. Okay, we have this breaker here, then we have another breaker which is forming at the second leg of our price. Okay, this is our manipulation leg that did the stop hunt, but we can use this breaker to take early entry. Okay, we'll be here in this scenario, in this kind of scenario, when price presents a scenario like this, we'll be looking for price. When price forms these down close candles right here, we'll also be marking it as a breaker block, and we will expect to see price forming a new PD array, specifically a fair value gap, and that's where our entry will be. I think I don't need to explain it anymore here. I guess you guys already understood it, right? So we have our Reaper here, and this PD array is forming inside this Reaper, and that's what making it a high probability. Okay, inside our breaker, a price forming a new breaker, and then we have a new fair value gap forming. So what are the rules? We are not just executing once we see this breaker, okay? Price will have to form a new PD array alongside with this newly generated breaker at the second leg of second leg here, okay? So price generated break fair value gap here. As soon as price closes a contest body below, retest this breaker here, okay? As you can see, this this candle price retested it. You can execute here, or you can wait for price to fill this fair value gap. Your execution can be here with a stop loss higher. So is everything clear with Reaper, folks? I'll be moving to reclaimed order block, sorry, reclaimed breaker block. So before I do, I want to make sure that everything that I shared here is clear to each and every one of you. I saw a screenshot you shared in private group. Few of the trades has manipulation lag inside the macro. Is it okay? Yes, when price is doing this, this should be inside the macro must. Okay, this is a must rule. Our entries should always be inside the macro. Okay, folks. This setup, the formation can happen outside of the macro. As you can see, price did a high resistance liquidity run here, so we are expecting to see high resistance liquidity run outside macro. Inside macro, we are expecting to see low resistance liquidity run. So high resistance and low resistance liquidity run will get more cleared in our upcoming slides. So now I'll be taking you guys inside a new theory, reclaimed breaker. How can we use a breaker that fails? Okay, the same logic that I shared inside this slide. Let me show it to you all. Do you guys remember this slide? Here we talked about how to predict a new PD array forming in the new curve of the price action using old order blocks. Okay, so if you guys didn't understood anything here, I'll suggest, or if you guys missed it, I'll highly suggest you to watch it first and then watch the reclaimed order block, sorry, reclaimed breaker lecture. Okay, because if you don't understand this concept here, you won't understand the reclaimed breaker concept there. In this concept, I'll show you how to use a failed breaker. This concept here is same as reclaimed order block, only difference is this time we will look at the price lag that has a stop hunt. So when I was talking about using reclaimed order block to predict new PD arrays, that time we didn't have a rule like price will have to have a stop hunt, but this time as we are using old breaker, our rules say that we will have to have a stop hunt, okay, before we are choosing the old breaker to predict the new PD array. So how's the formations gonna be? So we have a sell side market maker sell model here. Do you guys identify any breaker here? Can you guys see it before me marking it? So as you can see, we have a higher high here, a new higher high. So these down close candles here are working as our breaker. Then we have another higher high, new higher high. So this down close candle here working as our breaker. So let me mark that for you. We have our old breaker here, right? We will project the last down close candle prior to the move up. Only difference is we will have to have a stop hunt this time, okay? And as you can see, we are only marking the PD arrays that has the last down close candle that has a move up with a stop hunt. As you can see, we have our last down close candle prior to this move up, and this move up cleared out the buy side liquidity from here, and then it went lower, right? We will not be marking a order block, the last down close candle, without a stop hunt, okay? We are not gonna mark this. We are only gonna mark this PD arrays when we are trying to predict a new PD array. But when we are using reclaimed breaker, this is the logic we will use. The price like that has a stop hunt. So the rules are same as before. We'll be looking to see speed when price is going through the old breaker candle, the last down candle. We'll be expecting to see speed. Without speed, none of these concepts work, folks, okay? And then what we'll be looking for, here we have a different rule. Near to the old breaker, okay, folks, we will be expecting to see a new breaker forming, okay? So before, in our reclaimed order block, if you guys remember, I told you guys that we'll be looking for a fair value gap forming, okay, plus a new breaker. But using the old breaker, a fair value gap is more high probability. But using a old breaker, we'll be predicting a new breaker. This time we are not expecting to see a PD array forming here, but we are expecting to see price using the old old breaker to get support towards buy side liquidity, plus forming a new breaker near to the old breaker. And as you can see, price did actually form the breaker here. We have a low here, okay, then price went up. You can buy here, or you can wait to see price forming a breaker, okay? This is a very high probability scenario. Price will form a breaker, folks. In a new price, like in a new market maker buy model, there will always be a breaker that you will see, okay? So we have a low here, new lower low. This up close candle is working as a breaker, and as you can see, we will expect to see price forming a fair value gap here. Why? Because we have a old down close candle, old order block prior to a move up, and as I told you guys, when we have this, we expect to see a new fair value gap forming here. So we have a new fair value gap forming here. We can use it to buy. We also have another confirmation that price has a breaker here. We are only focusing on the price leg that did a stop hunt. The rules coming here again. When we are using reclaimed breaker, we are not using a down close candle without a stop hunt. When we are using a reclaimed order block, we are using the down close candle without a stop hunt. From market maker sell model to market maker buy model, last down close candle before a stop hunt, okay? So this is our market maker sell model, and we are expecting to see new PD arrays forming near to the old breaker. And for that, what are we gonna use? Last down close candle before a stop hunt. So we have our last down close candle before a stop hunt, last down close candle before a stop hunt. Here, no stop hunt, no stop hunt. These candles are order blocks, not reclaimed breaker. We will extend it out on time, and we will expect to see price forming a fair value gap right next to this old reclaimed order block. From market maker buy model to market maker sell model, last up close candle before a stop hunt. So this here, I show you guys an example of market maker sell model to predict a market maker buy model, okay? But when you are predicting a market maker sell model from a buy model, you will be looking at the last up close candle before a stop hunt. I'll show you guys the formation in the actual chart, and that will make a little bit more sense. We'll be looking for old resistance to work as a support when we are looking looking for buys. Okay, so these are the old resistance levels that price used to uh, get resistance towards sell side liquidity, right? This was our old breaker, and as you can see, price came back up, retested the breaker, and then went lower. Here we will use the same level, okay, that previously provided resistance for price. Now we'll be using the same level to expect to see support in price. When price is going above the last down close candle from the sell side of the curve, it should show sign of speed and volatility. Okay, so when price is closing a candle's body above the last down close candle of reclaimed breaker, we want to see speed. A price can form a new PD area here, but we are not looking at that. We are looking at price using this level, this last down close candle before a stop hunt, for to get support towards buy side liquidity as a support level. Okay, we'll be looking for a new bear breaker to form near to the old breakers, just like we used reclaimed order block to look for new PD areas. How will you expect to see, and where will you expect to see a breaker forming? Okay, that's a very important question, and this is getting answered here. Near to the old breakers, you will expect to see the new breakers forming. That's the only thing that price does. You didn't know it so far, that's why you never saw it. Now go and look at your chart. You will see at the old breaker, near to the old breakers, price formed a new breaker. So let's look at the formation in the actual chart. We have a breaker formation here. We have a higher high, new higher high, price went below. This is our last down close candle prior to a move up with a stop hunt, right? So we'll be marking this last down close candle, and when price is coming near to it, we will expect to see speed, price going higher, closing a candle's body above, and then retesting this breaker to form a new breaker or to get support toward buy side liquidity. So this is our old breaker. Now we'll be using it as a reclaimed breaker. Why are we not using this down close candle here? Because this down close candle has no stop hunt. This here is a reclaimed order block. This here is a reclaimed breaker block. When we are using reclaimed order block, we are expecting to see a new fair value gap forming. When we are using an old breaker block, we are expecting to see a new breaker forming. Okay, I hope it's clear. Now let's look at this formation very close. We have this old order block, and as you can see, price went up as we expect to see. Price formed a new PD area here, new fair value gap. Plus at the same time, price used this fair value gap to get support. Our logic was from this last down close candle, this reclaimed order block, this should project a new PD area, and it did. Now how will we use this old breaker? We can use this old breaker to expect to see a new breaker forming, or we can use this breaker to get support towards buy side liquidity, to expect price to get support towards buy side liquidity. What do you see here? At this candle, price closed the candle's body higher, right? This candle closed higher above this last down close candle prior to this stop hunt, and this candle, as soon as price closed this candle here, we will expect to see the next candle coming lower, hitting inside the old breaker. This is the logic that we are using here. We are not using any logic from a candle here, okay, or this old order block, but we are using this old breaker to see price using it as a support. I hope it's clear, folks. And as you can see, price got support from here and continue its trend higher. Where will you put your stop loss here? You will put your stop loss right below this old breaker. Okay, this week this week that you see, folks, this is where your stop loss will be. So here again, we are using very narrow stop loss, and we are targeting this swing high, the nearest drawn liquidity, or suppose if you can identify a relative equal high or unfilled fair value gap or something like this, will be targeting that. So anyway, you are getting a 2R with a stop loss down here. Price using reclaimed breaker to get support. Okay, old resistance turned into support. If you look close, you will see price is doing immediate rebalance from the reclaimed breaker. right here. Price is doing immediate rebalance after closing a candle's body above this last down close candle prior to this move up with a stop hunt from the reclaimed breaker as soon as it closed a candle's body above. So you will have to be fast in pushing button here. So as soon as price is coming down, okay, retesting this breaker, you will have to push the button here. If you are getting late in pushing the button here, you will miss the trade. That's it. There are no chance of entry here other than this fair value gap, but this fair value gap is not a surety. Okay, I'm not giving you 100% of guarantee that this fair value gap will form, but what I'm giving you a confirmation that with high probability price will repeat this scenario. This fair value gap can form here or not, but this thing will repeat. So you will have to be very first, do a lot of tape reading, a lot of back testing with this concept for you to execute here. If you do not do a lot of back testing or tape reading or demo trading, trust me, you will see it after, but you will see it in hindsight, but in the real actual chart you won't see it. So I'll show you guys another example with reclaimed breaker. This time we will see a choppy price action, and as you can see, it's very easy to outline, folks. The old breakers, you can easily outline it. The logic is very simple. Okay, so we have a higher high, new higher high here. We have our last down close candle. Price is using it as a breaker, right? So this is our old breaker that we will use to predict a new breaker. Do we have any other breaker here? Yes, look at here. We have a swing high here. Okay, sorry, so I forgot to mark these candles as bullish candles. So these are bullish candles. We have a swing high here. We have a relative equal high, price came up, okay, cleared out the buy side liquidity from here. So this down close candle becomes our breaker. So we have another breaker here. So let's mark this. This is our breaker that we are marking. Then this is our breaker. We also have reclaimed order block that we'll be using to get to predict new PDRAs forming in our chart. So do you guys see how I put it everything, and now everything is coming together in our trading, right? I taught you guys the actual breaker, how a breaker forms. Now we know how a breaker forms, how many types of formation is there. Now we are talking about market maker buy model, what we will be expecting to see, when we will expect to see a new PDRA forming, when we will expect to see a new breaker forming, how price will use a old breaker to get support, everything, right? So as you can see, we want to see our rule says we want to see when price is going, when price is near to the last down close candle prior to a move up with a stop hunt. We want to see speed in price. And do we have a speed here? Yes, this candle moved higher, closed the candle's body above this last down close candle prior to this move up with a stop hunt. We are only focusing on the price leg that has a stop hunt. Okay, folks, I'm reminding you guys again. And as you can see, this fair value gap became our breakaway gap, okay, because this is lower and this is this fair value. So when price is forming a fair value gap inside the breaker, okay, inside the old breaker that we are using as a reclaimed breaker in the new price action, the fair value gaps that will form here, the fair value gaps will be low probability and it will work as a breakaway gap. Okay, that's how I outline a breakaway gap, and that's how I saw price not respecting a fair value gap, okay, because of the logic here. Now you can see that price formed another breaker here. We have a lower low, new lower low, so this up close candle becomes our breaker here, right? This is a this is a complex price action, folks. So before in our previous slide I showed you guys a easy price action, okay, but this here is what price will repeat often. So we have a order reclaimed breaker here. Now we will expect to see a new breaker forming here, plus price to get support from this old reclaimed breaker. And as you can see, we have a lower low, new lower low. These up close candles are working as a breaker. You can execute here with a stop loss below here, or you can execute at this candle As you can see at this candle, price is retesting this breaker, and I already taught you guys how to take entries here, right? We are seeing an immediate rebalance here, price is doing that, and we have also have a fair value gap here, a small fair value gap, a small little separation right here, right? So price will come down, hit this fair value gap. If you are missing entry here, then you can execute here, and you will expect to see price going higher. Once price is actually going higher, you will put your stop loss below here, below this last down close candle prior to this move up with a stop hunt, because if price is coming down and going below here, that means what? Price already hit a premium PD area, now it wanna go lower. We don't want to see any retracement lower, folks. We want to see price continuing its trend, getting support from this breaker, and that's it. We want to see price forming a new breaker near to the old breaker. This is what price can do. Price can also do that, not form a breaker, but actually use this old reclaimed breaker to get support towards buy side liquidity. Yes, old buyers plus new buyers. Okay, so this is the logic that we are using. Just let me know that if everything is clear in our previous slide. We will be moving forward into our next slide. Is everything clear that I shared here in the reclaimed breaker? So now, so far I showed you guys how to take like short-term entries targeting 2 hour, max 4 hour. Okay, so the every single model that I shared with you all before, that model will generate minimum of 2 hour trade, and maximum you are holding is 4 hour. I will also show you how to predict your target using standard deviation, which is coming later in our lecture. But this time I will teach you how to hold trades by using higher time frame. Okay, we'll be executing a lower time frame, but we'll be holding trades according to the higher time frame PD area. When price is delivering liquidity in a trend aggressively one-sided, either buy side or sell side on higher time frame, we will expect to see price forming short-term liquidity levels after hitting a lower time frame PD area on lower time frame, and that's where our strategy will work best. I know it's a little bit of confusing because a lot of things we are putting here together, but once I show you the chart, the formation, everything just like before will make sense to you. In this strategy, we will use higher time frame PD areas for price to get support long, and for short we will be looking for price to get resistance from the higher time frame PD area. Our high probability breaker will form on lower time frame inside higher time frame PD area at optimal trade entry level. So when we are going to hold trades using higher time frame, we will be looking to execute on the higher time frame level, on the lower time frame at the OTE level. Okay, folks, it will make more sense once I show you the formation. In writing it becomes a little bit confusing, but when you see the actual chart it makes a lot more sense. So the formation that we will be looking at is gonna be on the higher time frame. So here we'll be looking for 3 types of formation on higher time frame. Okay, So as you guys, as I told you guys, that when price is in a trend, this strategy is only applicable when price is in a trend. Okay, folks. So how will you know the price is trending? When price is generating consecutive down close candle or up close candle in a row, and price is leaving a fair value gap like this. This formation is happening on higher time frame. Okay, folks, I'll take you guys on the lower time frame, and you will see like how we will expect to see like a PDRA, a breaker forming inside here, and this level exactly will come at the OTE. This is the fair value gap. This is the first formation. The second formation that we'll be looking on the higher time frame is with the implied fair value gap. So what is an implied fair value gap? It's a hidden fair value gap. Okay, folks, when we have a candle here, and right next to, we have two candles right next to each other, we have two candles, and the wicks are crossing each other. Okay, when price is doing that, these wicks will be measuring the wicks and will be marking the 0.5 level, the consequent encroachment of the both wicks, and this will be our implied fair value gap. The third formation will be with the volume imbalance. Okay, so this price action that I'm showing you here is forming on higher time frame, folks. Remember, once price is retesting the level or coming back up inside this implied fair value gap or this fair value gap or this liquidity void, we will drop down to lower time frame and we will look for setup. There are rules when price is coming back up. It will also have to generate relative equal lows for us to make the setup a high probability setup. So now we'll be looking for the formation on lower time frame. So here, as you can see, we have this same price action repeating on 3 and 1 minute chart with a lot more candles. On 4-hour, hourly and 4-hour chart, you will see less candles, but we confirmed that price is trending. How did we know that price is trending? Price is having couple of consecutive down close candles in a row with an unfilled fair value gap, with an unfilled implied fair value gap, with an unfilled volume imbalance. So a question can be asked from you that why am I not showing you a order block here, or suppose other PDRAs here, because other PDRAs are not high probability as these PDRAs. So what I'm sharing here is my experience, the patterns that made me profitable. So you don't need to know about all the formation, but the formation that will actually make you profitable. So we have our fair value gap, implied fair value gap, and volume imbalance. Everything here is unfilled. Okay, so this price action is happening on 3 minute and 1 minute chart. Now what we will do is that we'll be marking the higher time frame PDRA. When we will wait for price to reach inside this higher time frame PDRA, and then we will look for a breaker forming. So suppose from where price will reject, okay, from where price will retrace and hit these unfilled PDRAs, we will expect to see price hitting a lower time frame discount PDRA. So what can be the lower time frame discount PDRA? Go back to the beginning where I shared the fifth rule, which is the target. We will have to have an unfilled fair value gap. We'll have to have an unfilled BPR, relative equal lows, unfilled new week opening gap or new day opening gap, and that's what makes our setup high probability. A high probability target makes our setup high probability. So suppose we have an unfilled fair value gap here, or an unfilled new week opening gap, a relative equal lows, price cleared it out. Now we will expect to see price retracing higher. Okay, so when price is doing that, it's going inside this volume imbalance, this implied fair value gap, and this fair value gap here, which was unfilled. Okay, and at the same time when price was going up, it's also generating relative equal lows. This is the same thing we want to see on lower time frame. Okay, folks, if price is not generating this relative equal lows when it's going and reaching for the higher time frame PDRA, this is not a high probability setup. Trust me, it is not. What I'll suggest you to to avoid the setup. And here comes our higher time frame PDRA. On lower time frame, as you guys know, that higher time frame PDRA will be a lot more, it will take a lot more space. On lower time or on higher time frame, these PDRAs may seem a lot smaller, but on lower time frame this PDRA will become a lot higher. So that's the reason I put it another rule here, that we will look for price to reject from the OTE level, optimal trade entry level. Look at the last rule. Our high probability breaker will form on lower time frame inside higher time frame PDRA at optimal trade entry level. As our higher time frame PDRA is taking a lot more space on lower time frame, is confusing for us to get to select like from where price will exactly reject, right? So to give you more confirmation, you can add the OTE from this swing high to this low. Our OTE level will come somewhere here. If you measure it, the 0.62 and 0.79 level, these are the OTE levels, and it will come right here. Price hit our OTE, and do you guys see a breaker forming here? Yes, a breaker, it is here. So we can look for all the entries, all the patterns that I showed you guys before, the 7 high probability breakers, the Reaper formations. We can look for entries with breaker here. Okay, we can also look for entries with other formation that I showed you guys here. Once price hits the OTE, this is a turtle soup. So these lectures are specifically coming in the turtle soup. Turtle soup day. I'll teach you guys how to take entries right at the top here, but for that you will have to follow some rules. You will have to learn how to see the breaker first, okay, how to see the inversion first, and then the turtle soup will come, because this is the advanced, as advanced is gas. Okay, the turtle soup is the advanced level of entry that I'll teach you guys. And for me personally, to take entries with turtle soup, it took 2 years. So I started taking entries with turtle soup in 2022. So from that time I was mastering turtle soup, and so far I believe I did, and I was able to identify high probability setup with turtle soup, and that's what I'll be sharing in our coming days. Okay, so we have our breaker here. We don't have any other, sorry, we have a PDRA right here at the second leg, okay, of our breaker. So we can take an early entry from this breaker, right folks? We have our Reaper here. Inside the Reaper we have an inversion at a discount price lag. So what we will be expecting to see price doing next, we will be outlining this fair value gap, which is now inversion fair value gap, plus price confirmed that it wanna go lower, continue its trend lower from this inversion as it closed the candle's body below here. So this is the type of formation that you wanna see next. Price hitting this fair value gap and coming lower. So you can put other types of formation that I showed you in the previous slides here, okay, and you can repeat the same kind of logic again here when price is trading inside the higher time frame. So here another thing is that folks, price can also go up, okay, on the higher time frame. So we'll have to leave some room for when you are trading like this, okay. If price is generating an inversion like this, then you can only manage your stop loss very narrow. You can put your stop loss up here, but suppose there's no fair value gap here, so where will you put your stop loss? Same again here. Or if you are patient enough and you watched price closing a candle's body below the breaker, you can execute at this candle right here, which did a immediate rebalance at this breaker with a stop loss above here. We still have our high probability target left intact, right? Price didn't clear out this really weak low, so we can target it. This alone, this formation alone will generate you 2R, and if you are holding longer, targeting a higher time frame level, then this trades alone will give you minimum of 5R. What I was getting is like 1 to 8R, but these are very rare. Okay, these are very rarely happens on the higher time frame, because I shared very specific formation, folks. Unfilled fair value gap, implied fair value gap, and then a volume imbalance. Each and every one of these are unfilled. Plus there are rules. Price will have to be in a trend. Price will have to hit the OTE. Price will have to generate relative equal lows. So a couple of rules here. If everything is aligned and you can see the setup forming on lower time frame, do not hesitate to take it. Here inside here we'll be looking for 7 types of fair value gap, 7 types of breaker that I showed you guys forming here, okay. This can form here. We can also have PDRAs inside Reaper, we can have an inversion in the premium leg of the breaker, or we can have a fair value gap at the discount leg of the breaker. So any type of formation can form here. This is not a specific formation that this breaker will form. No, it's not like this. Any types of seven breaker that I showed you guys, the high probability breaker, it will form here. And when price is activating this breaker or hitting this OTE, our time will match too. Okay, price will also hit this OTE level plus this inversion, plus price will activate this breaker inside our macro time periods. So I hope everything is clear here. Let me know in the chat if you guys have anything to understand more here when breaker is in a trend. Now we'll be moving forward to our next slide, which is time distortion with breaker understanding, high resistance liquidity run and low resistance liquidity run. Plus this concept will help us to avoid high resistance liquidity run. The algorithm refers to time first, not just simply a price run. So we are looking at time before looking for any types of setup. Okay, before we look for a breaker form, we are looking at the time. Our time will have to match with the breaker. Okay, I shared with you all the manipulation macro. This is when price will do market structure shift. Then I shared with you all the macros that are like trend that will continue the trend. So it's all there in the beginning of the lecture. So if you go back and listen to it, you will be able to see it. Okay, so we focus inside macros because that's when price does the expansion, delivers liquidity with low resistance. Outside macro, price will most of the time will deliver liquidity with high resistance, means price will get choppy. Okay, that's the time we expect to see price becoming choppy. Outside macro, price will do consolidation, seek and destroy, manipulation. Simply, if I put it this way, macro is low resistance liquidity run, that means high probability. Outside macro, high resistance liquidity run, that means low probability. So we'll be avoiding everything that is outside of the time periods that I shared with you all. If you want to be a little bit more cautious, you can use the time periods that I personally use, and I refer to it as HYDRA's high probability macros. Okay, those macros are very high probability, but you can, it depends on you what macros you are using. I shared all the high probability macros, and that's the macros that you can use. So what do you see here? Okay, we have a low resistance liquidity run here. Price is not choppy here. Simply just think like this. Okay, folks, you don't have to use complex logic to identify high resistance or low resistance liquidity run. When price is not choppy and delivering one-sided, that's when it is low resistant. Okay, when price is getting choppy, like here, look at that. We know the price is gonna clear out this swing high, but is it clearing out like straight like it did here? This movement here in price was a straight movement, but here, as you can see, this movement is not a straight but a choppy price action, right? Price also generated a breaker here but never activated this breaker, rather continued higher and cleared out the buy side liquidity here. So don't worry, this type of price action that you see formed here forms usually outside of our macros. So the low resistance liquidity run is happening inside our macro. high resistance liquidity run that you see here is happening outside of the macro. Go and look at your ES chart right now. You'll see the same thing happening. The macros that I shared inside the time period, most of the time, no, I'm not guaranteeing you that 100% of the time, but if you only look at today's chart, you will find out that most of the time price did low resistance liquidity run inside macro. Outside macro, most of the time price was doing high resistance liquidity run or consolidation or manipulation or seek and destroy. So inside macro, we expect to see low resistance liquidity run. Outside macro, we expect to see high resistance liquidity run. So once price get backs inside the macro, we'll be expecting to see low resistance liquidity run. So I hope this concept of high resistance and low resistance liquidity run is clear to you folks, because it's very simple, folks. We are looking for price to deliver liquidity with speed. And when it happens, when is it happening inside our macro? Outside of our macro, we are avoiding taking any types of trade or predicting what's going to happen. All of our analysis should be inside of our macro, and that's what happening here. The examples that I showed you guys, okay, if you go back and look at the examples, you will see that the high resistance liquidity run is when the high resistance liquidity run is happening, price is generating targets for us, okay, relative equal lows. That's when the relative equal lows gets generated, okay. And inside our macro period, when price is hitting a high probability PDRS, suppose a fair value gap at discount with breaker, or a fair value gap at premium at breaker, or a inversion fair value gap at discount or premium, either of these, when price is hitting it, that price action is hitting inside that price action is happening inside our macro levels. When price is coming inside the macro, this is the price action that we expect, a speedy price action with less choppiness, right? Compared to this choppiness here, price is way more clear here. So is it clear in this slide? Everything that I talked about, is it clear now? Do you understand the high resistance and the low resistance liquidity run that I showed in the previous charts? Is it clear, folks? Do we have to close trade if we do not hit target before macro starts, before macro overs? Yes, I'll highly suggest you guys to close your setup if you are already in a trade, that if price is going after like the macro, going outside the macro, and you are already in a trade, close it. There's no need to hope, because we have a lot of macros, okay, and we are only looking for 7 high probability setup. We are looking for these things to repeat in price, and inside either one of the macros you will find that this price is repeating either one of the setup very clean way, and that's when you execute. So the rule is you will have to be very patient, okay. What are you saying, Dr. G? Is the entry time always between X50 to X10? Doctor, I think you didn't heard when I was talking about the macros. I'll suggest you to go back and listen to the lectures again. I already talked about it. So now I'll be taking you guys in the next slide, implementing standard deviation to project target. Okay, so how this alone will give us more confirmation that we can hold our trades. So suppose if we have a target lower and it's also aligning with the standard deviation, then we can use it to hold our trades. Standard deviation is used to project a measured move of a specific price lag. Okay, what price lag we'll be measuring, I'll also share that with you here. The best way to project price is by using manipulation lag. The price lag that did the stop hunt, we'll be measuring the lag and we'll be projecting it out on future, and we'll be targeting those levels. So this is the 5th setting from our mentor for our standard deviation projection. Okay, I'm putting it here so that it becomes easier for you guys to use it. how can we use standard deviation with breaker? So we have our breaker here, higher high, new higher high. We have our last down close candle that are working here as a breaker. So where's the manipulation lag here? We'll be using this manipulation lag to predict PD arrays. Sorry, to predict targets by using standard deviation. Can these macros be used for features? Everything that I'm talking here, AMCO can be used in features. Okay, this is only for features. Everything that I'm sharing here can also be used in forex and crypto, but it is high probability for stocks, specifically features. So we have our manipulation lag here. What we'll be doing is that we'll measure this manipulation lag and project the prices. This is the price lag that we will use to project our target. And how will we do it? We'll put our fib according to the settings here from this high to this low, and we'll be targeting -1 standard deviation, -2 standard deviation. Okay folks, these are like the golden targets. I'll share more targets. There are golden targets that are coming in the next slide, but just for now, know that -1 standard deviation and -2 standard deviation is ideal for us to hold trades. So once price goes below a breaker and activates the breaker, we will expect to see price continuing its trend at the next candle. Okay, and as you can see, price did continue its trend at the very next candles. Price hit the 1 standard deviation. That's where we will take a partial. Or suppose if you took a entry from this fair value gap, right? Do you guys see a fair value gap here, which is coming inside our Reaper, right? We also have an order block here. So if you are taking your entries here, your TP can be here, and you will get more than 3R. I think if you are targeting here with 1 standard deviation, you will get easily 4R because your stop loss is here, right? -1 standard deviation is our low hanging fruit, that if price is activating a breaker, price will also hit -1 standard deviation with high probability, and this is our low hanging fruit. This is our nearest level of target. -2 standard deviation from breaker manipulation leg can also be used as a market reversal zone. -2 standard deviation, I consider it as a good delivery, usually presents the opportunity to get 2 to 3R. So if you are executing from this breaker here, you will get more than 2R, more like 3 to 4R. So most of the time, if I'm holding a trade longer, suppose I had an early entry from here, I'm holding till -2 standard deviation because that's an ideal lag for price to reverse. Okay, so we are not just using this standard deviation blindly to like see price getting rejected from -1 or -2 standard deviation. We will also use other PDRs that I will show you guys in our coming in another day. Okay, we still have 3 or 4 topics left from our today's lecture that I'll be sharing with you all in our upcoming days. Okay, so I hope everything is clear using how we can use standard deviation to project target. This is what gives us a little bit of extra confirmation in price, and this is what we can use to project our target and get confidence in our trade. Implementing standard deviation to project target golden reversal levels. So sometimes you will see that price is not rejecting from the -2 standard deviation, which I showed you guys as an ideal place for reversal, but this is not 100%. If price is still coming down and continuing its trend lower, we have other two levels from where we will expect to see price getting reversed. So what are the two levels? Negative 6.5 standard deviation and negative 6 standard deviation. And how will we know that price will go there? For that, we'll have to wait patiently for my upcoming lectures. That's where I will show you guys that how to predict this, how to predict the price will come down all the way here. From the breaker manipulation leg, these levels are ideal place for price to reverse if price is not reversing from the negative 2 standard deviation. Your ideal reversal zone must be aligned with higher time frame PDRA. Reason higher time frame PDRA is always greater than lower time frame PDRA. So this reversal zone has a logic behind it. Negative 2 standard deviation, negative 6.5 and 6 standard deviation, these has a logic, and this logic will be shared in our upcoming lectures, okay, with a lot of examples, just like I showed you guys before in our breaker formations. Now this is the last lecture before we are moving towards our final lecture. Okay, this is our last topic before we are moving towards our next topic. So importance of 20, 40 and 80 levels in price. These levels, okay, so suppose price is trading at 1920, 1940, 1980. These levels will work as a strong support or resistance level. Okay folks, so these levels in price are very important. So suppose if 20, 40 or 80 level is aligning with our breaker trade, we can use these levels, these price levels as a extra confidence. What I'm showing you here is we are not using these levels to take trades, but we are using these levels to get confidence in our trades. Okay, that's what matters. And mental health, I had to do a lot of things to find out these things, and what these things helped me is that it helped a lot to improve my mental confidence. Okay, if price is forming a fair value gap inside 20 level or inversion at 40 or 80 level, that's what working as extra confirmation for me. So what are these? In stock price is very sensitive when it's delivering liquidity at 20, 40 and 80 levels. You will see price using these levels as a support or resistance. So how will you know the price will use one of these specific levels as a support or as a resistance? It will depend on the setup. Okay, so suppose if the setup is a bearish setup, then we will wait to see price getting resistance, okay, from these levels. But if these setups are bullish setup, then we will use these levels to get support for price towards buy side liquidity. We can use these levels as a support and resistance to get a narrative on price. We are not using these levels to execute on a trade, rather we are using it as a narrative, like why price should go there. Okay, I can see a 20 level. Okay, I can also see a breaker with a fair value gap, so a lot of things are aligning, right? So these levels will work as extra confirmation in our trades. So this is gonna be our last lecture in today's the first day of our breaker. Okay folks, I know like this lecture is like 4 hours now, right? So me personally, I've been talking since then. That's the reason I put it away 3 or 4 topics for another day, because I believe it requires a little bit more time, right? Everything putting together is not good. So this is our 4 candle formation. And what is this? We'll be looking at this here. When price is trading inside a lower time frame high probability PDRA, we can use 4 candle formation to expect speed in price. Now we will use this theory to predict to count candles. Okay, this is the only time I count candles to get a confirmation from price that it will continue its trend higher or lower. The theory can also be used on higher time frame to decide bias. Okay, this theory I personally use it on lower time frame, but you can use it on higher time frame to get a narrative or to decide your bias. We will have a separated lecture on how to decide bias in our coming trading in our coming lecture days. So what do you guys see here? What do you guys see here? We have a fair value gap forming here, right? Alongside with the order block, this is, sorry, alongside with the mitigation block, this is not a breaker. Why? Because price didn't do a stop hunt here, right? So what's the logic of 4 candle formation? A 4 candle formation is like we are predicting price to expand at the 4 candle once price hits a high probability PDA. So we have a fair value gap here, right? I'll take you guys a little bit back. We have a fair value gap here. So once price hits the fair value gap, we'll start counting the candle. Price hit the fair value gap at the first candle. This is our first candle. This is our second candle. At the third and the fourth candle, we expect to see expansion, okay? First and second candle can stay inside the fair value gap, but if price is not rejecting from here, we will expect to see price rejecting with speed at the third and the fourth candle. The same logic can also be used when we are trading with breaker. Okay, suppose price is this is a breaker. Suppose this is a breaker and price did a stop hunt here. We have a fair value gap, which is a high probability setup, right? So what we will do that when once price hits the fair value gap inside the breaker, we'll start counting the candle. The first candle, we are expecting it to stay inside the breaker. The second candle, if we are not already seeing the expansion towards sell side liquidity, we will continue counting the candle. The third candle and the fourth candle, this is when we will expect to see price getting volatile or speed or continuing its trend towards sell side liquidity. Tips: as soon as price steps inside our high probability PDLA, we will start counting the candle. We will expect to see price getting speed or breakout from the PDLA at the fourth candle. Okay, so third or the fourth candle, we will expect to see price getting. No, the fifth candle we do not count it. Okay, we only count till fourth. If price is not showing any expansion at the fourth candle, fifth candle doesn't matter, we will close our trade. So this rule is only applicable with four candles. That's it. We are not counting candles after that. The same logic, the same price action can repeat on higher time frame. So when it's repeating, we can use the same logic there. Okay, folks. So this is the end of our first day of breaker, and I hope you guys found everything useful. Yes, we can look for this 4 candle formation in any time frame. Basically on lower time frame it can be 5 minute, 10 minute. This is not bound with rules. What is bound with rule? The formation that I showed you guys on breaker, that is what is bound with rules. Okay, so I hope you guys enjoyed and found my lecture informative. I'll close it here, and most probably our inversion lecture, which was supposed to be occurring on 24th October, will get delayed. So if it's getting delayed, I'll let you guys know. And till then, if you guys have any questions, folks, you can ask me in the Telegram group. We have a group there, right? So suppose you have a question, or if you are not you didn't understood this topic even after listening my lecture again, you can ask for more examples, and I'll love to show you guys more examples on specific topics that is confusing to you in our coming lecture days. Okay, folks? Okay, sorry, there's a mistake here. Okay, so these candles were supposed to be down close candles. Anyway, folks, you understood the logic, right? So I'll be providing a new template for this slide, because here the candles was supposed to be like black, but I drew it here with I put it with mistake on like the green candles. Everything that you show here inside the templates, everything I draw it from my mind. Like with 3 years of experience, I saw this price action repeating so many times, it like stuck in my mind. Okay, So if I see this formation, only this formation, I'm only executing at that time. So the folks who missed the first half, I'll highly request you to see watch it again, because a lot of things will not make sense to you in the next half part of the lecture, because at the first part I explained it already. So I'll catch you guys in our next lecture, which will be on 24th. Hopefully I will not get it delayed. If I can finish it, if I can finish making all the contents, I'll present my lecture on 24th, which will be on inversion. And this lecture was 4 hour long, folks. I shared from the basic level to the advanced level of breaker. So I hope you guys understood. I'm saying it again. If you guys have any question, you can ask me in the Telegram group. I'll be available there. If you are hesitating answering it in the public group, you can text me personally or email me with the template, and I'll love to share more examples about that. Till then, peace guys, and I'll catch you guys later. And the PDFs, okay, so the PDFs are not free. If you are interested, you can already take the screenshot. I'm streaming on 4K, but if you are not satisfied with the quality, you can buy these templates or PDFs. I'll be selling these PDFs for $30 for each session. So if you want all the PDFs, all the templates, I shared over 40 templates here. Okay, folks, so let me check how many templates I shared here. Over 38 templates. Okay, so the 38 templates, if you want all of these in high quality, just let me know, and you can pay me via PayPal to get all of these, plus a recording version, because everything was here coming with after one another, right? So if you are taking screenshots, then you will not understand like what I showed you here, what formation was coming after what formation. But if you want to buy it, you can buy it from me. I will share the recordings as it is, with each and every slide coming after each other. So till then, folks, take care, and I'll catch you guys later. I'm closing it here. Peace.